And in this lecture, you will find ready-to-use expert advisors, which I will attach as a resource file, and you will be able to test them along the course if you have the experience, if you have watched some of my other courses. If not, just download them and be patient in the next lectures to see how they work and how you have to put them properly on the MetaTrader platform. I will talk a lot about the MetaTrader platform because it's the most common platform for algo trading, and as well you will see step by step how to use the robots included in the course. But in this video I will explain the difference between algo trading and manual trading, and I won't tell you have to trade only with robots. The algo trading is the best thing in the world, but I will make it easier to take a decision, and during the course, very importantly, I will share how the strategies work manually and how they work with the expert advisors, so you can compare both and decide if you want to trade the strategies manually or you want to trade them with the expert advisors. This is the name of the robots. So the first thing I really have to mention is that algo trading requires work as well. A lot of people think that when they start trading with robots, they'll just put them on the chart and they will enjoy their life while the robots make money for them. Fortunately, that's not the case, and there is some work to be done. Same thing when you are doing YouTube videos or you are an online instructor like me. Usually my friends and others think, oh, he has no boss on his head and he's just enjoying his life. True, I'm enjoying my life, but there's a lot of work behind the scene, okay? Not only shooting the videos, there is editing, there are captions, there is the scenario of the videos, how we structure the courses or the videos, and it's a lot of work. Actually, it's a lot more than you can imagine, but I really enjoy doing that and spending my free time in recording videos and recording my training. Same thing with the robots and algo trading. There is a lot of work to be done before you put the robot on the chart and start trading with them. You need to backtest them, you need to have a robustness test, you need to perform different demo and live testing on different brokers. It's a lot of work that I already have done and I'm doing daily, especially with the robots that I share in my videos, in my courses, and this is because I want to share trusty robots. However, there is always a risk. Even the robot performs well until the moment, it could start losing in the future. And same thing when using manual strategies. You can make profits until one moment and then start losing with the very same strategy because the market changed. And quite often people buy robots and at one moment they say it stopped working. It stopped working because the market changed, not because the robot is not working anymore. It's still opening and closing trades when there are the signals, but the markets change and you cannot really expect the same results day after day on the forex market, on the crypto market, or on the stock market. The market changes, so you need to be flexible with the robots, and this is why I do a lot of work daily to maintain the robots up to date and to use them for my trading. So that's the first thing you need to have in mind when you are thinking about algo trading versus manual trading. Both have this concern that the manual strategy or the robot might stop working at one moment, and this is one more time because the markets change. Now, if I have to give a really precise idea about what's the difference between manual and algo trading, I will have to say that when we are doing manual trading, simply we are using our mouse, okay? And we have to do all of those analysis and price, action trading, indicators over the chart, predicting where it might go. This is, for example, the Axie Infinity, a crypto coin that I have bought yesterday, and it's already on a profit. I have bought it in here, it's already on a profit. What is it? 21%, which is pretty good for one day. So what I did all the analysis over the chart, and I saw a great opportunity right at that moment, just below the $75, already at nearly $90, and I said, okay, it's time to buy some Axie Infinity. What I did, I took my phone, I logged into the exchange that I'm using, and you can see that in this account I already have Axie Infinity. Here it is in this wallet, sorry, in crypto it's called called wallets, right? So if I go to the trading section, you will see that I have it in the order history. Here it is. I have bought Axie Infinity at 77.25. Actually, the price was already a little bit higher. So this is the thing I'm saying. I did the analysis. The price was 74 something. And while I took my phone, logged into my wallet, I didn't have any cash or stable coins. So I had to fund it with my debit card, and it took me probably not more than 5 to 10 minutes, but I succeeded to take it at 77.25, which is $2 to $3 above the price where I wanted to buy, okay? This is one of the things when you're doing manual trading, you are always late, and that's a risk you are taking when you're doing manual trading. So I have bought totally for 200 USDT. This is the dollar stable coin. And now if I go to wallets, you will see that already in Axie Infinity I have $231, alright? So $31 as a profit from that position on Axie Infinity, but that's on my wallet. So this is really a manual work, okay? I do the analysis over the chart, I decide to buy the asset, then if it's a crypto and I want to buy it into my wallet, I have to grab my phone and do the whole thing, and it takes a couple of minutes, and if you're not experienced, it will take you quite long. Now when you're doing algo trading, the robots do the whole thing, okay? I had the MetaTrader platform in front of me, which is the most popular platform for algo trading. It's the trustiest one, and it was very popular in the forex market, but now there are cryptos, there are stocks, and we can trade everything with robots. So right in front of me I have the euro dollar, the pound dollar and euro pound, and I have the 3 robots. So here they are. You can see that for the last month or so they have been trading very successfully, and I had $99 of a profit, but this is because I was trading just 0.1 lot. If I was trading a complete lot, I would have had $991, and if I was trading with 10 lots, I would have had nearly $10,000 as a result. So it's all about how much you're trading with, right? If I was trading the Axie Infinity with $2,000 instead of $200, I would have had $300 and not just $30 as a profit in one day. But in my videos I always aim to show trading with small amounts, because I don't want you to take it as a recommendation trading huge volume and amount. It's your personal choice with how much you are trading. The thing is, when you are trading with expert advisors on the forex market, on the crypto market, once attached on the chart, they are following the market with certain strategies and they are executing the trades. For example, at this moment I have 3 trades opened with this robots. I have one for the pound dollar. So let's see where it was open. If I go to the end of the chart, you will see that the last trade was open right in here and it's already on a profit, okay? The other 2 are on a loss, but we usually don't look at the open trades. We usually look at the final result because this is what matters. But here is the open trade, okay? We have the stop loss below and the take profit is very close to the current market. Now you can see that this strategy follows 3 indicators, which if I have to do manually, it's a lot of work. And if I want to trade different assets, if I want to trade euro dollar, if I want to trade pound dollar, euro pound, if I want to trade Axie Infinity and all the other coins that I'm trading daily, it will be nearly impossible if I do the whole thing manually. So personally, I do algorithmic trading on the forex market, I do it on the crypto market, and I do it on the stock market. Now when I want to invest in cryptos and my wallets, then I have to buy it manually. But when it comes to pure trading, I prefer algo trading because I can trade many strategies on many markets and I can really enjoy my life, okay? I don't want to stay in front of the screen all day long. I used to do that, not enjoying it anymore. Alright, I really hope I succeeded to make it easier for you to decide if you want to go for manual or algo trading. And since you're taking this course, I guess you want to do more algo trading just like me. And I'm sure by the end of the course, you will have a complete idea what algo trading is and if it's the right thing for you or not. Don't forget to download the robots from this video, and I will see you in the next. Hello everyone, it's Petko Alexandrov, and in this video I will share with you what is the difference between demo and live trading. And what actually is the demo trading? This is demonstrational trading, or it's a virtual trading where we don't risk real money. With most of the brokers and platforms, we can open a virtual account with money that are not real, so we cannot lose really anything. And if you lose the money, you can restart the account and practice. This is the idea of demo account, to practice virtually with your strategies, with your robots, until you get comfortable for your trading and you can start trading with your live account. However, there are a few things you need to bear in mind, and in this video I will talk about the difference between demo and live account. So first things first, I always suggest my students, subscribers, and everyone watching my videos to start on a demo account. This is where you cannot lose money, okay? You don't put any money into your account, into your crypto wallet, into your broker's accounts, so there is nothing really to use. All you have to do is practice trading until you get confident, until you are satisfied with the results from the strategy or the robots that you are using, and then you can switch to live trading. But switching to live trading, it's not easy, and this is why. Demo versus live trading could be really equal if your broker offers the very same prices on the chart. For example, in front of me I have the MetaTrader platform with a broker, and here we have all of those candlesticks which form the historical data on the chart, and we can see actually where the price was at any moment. However, some brokers offer different data on the demo account and different data on the live account, and you can see that. So the first thing you need to do is, when you open the demo account, pick a bar that is very different from the others, so it's easy to recognize. So for example, right now I'm on hourly chart in euro pound, and I have this huge bar. If I put the mouse on the closing of the bar, right, I can see the open, the high, the low, and the close prices. These four values which are very accurate. Now do the same thing on your live account. Open the same chart on the same time frame, put the mouse over it, and see if your live account matches with your demo account. See if the bars have the same value. Now, if you're going for manual trading, the second thing you can do is to open one trade at the very same moment on your demo and your live account. Open a very small position, a tiny fraction of your capital. For example, buy euro dollar at whatever price it is with 0.01 of a lot, and open the same position on your live account, and then put a stop loss and take profit for those positions, and see if the broker will execute them exactly. Just leave the trade going. For example, 20 pips away, nothing really to be bothered about, but just see where exactly your trades were opened, and if the broker did a precise stop loss of your position on the demo and on the live account. Now, if you're not familiar with all of these terms, don't worry, I will explain them later on in the course. Now, the third thing you can do is to test your broker if you're struggling with demo versus live trading with a robot, okay? Place a robot on a demo account and place a robot on a live account, again with a very small fraction of your capital, 0.01 of a trading lot, and leave it trading for a few days. So this way you will see if the trades are opening and closing precisely and exactly the same on your demo and your live account. And this is super important, guys. You have to test your broker for demo and live trading. You have to do that. Anyway, it's useless to test any strategies, robots on a virtual account if your broker doesn't offer the same conditions. It's just like preparing yourself for a marathon and you're running on a stadium for a few months, but then the actual marathon is through the mountains. It's the very same thing. You have to make sure that the broker offers the same trading conditions on demo and live trading account. Anyway, it's absolutely useless to do anything on the demo account, okay? Again, the best thing for me is to go test with a robot and see if the broker will open the very same trades in the demo and the live account. Hello everyone, it's Petko Alexandrov. Hope you are doing well, and in this video I will share with you which are the best platforms I've been using throughout the years. I will compare the two platforms that I use the most. This is TradingView that I have on the left, and this is MetaTrader 4 that I have on the right. I will share with you some of the pros and cons for the two platforms, and of course I will explain more about different platforms. So nowadays all the trading brokers, all exchanges and all wallets, they already have platforms. Some of them only have apps on the phone, but others have web versions of their platforms, which is pretty cool because you have a huge choice of different platforms, and most of them are very suitable for beginners. So even you have no any trading experience, just with a few tutorials and guides from the crypto exchange, you can get used with the platform very quickly within a few days or even hours. So of course the first important thing is to choose your broker or crypto exchange that you will be using, crypto wallet. There is so much information over the internet, so it's really your personal decision which crypto exchange or wallet or broker you will be using. So to make it clear from the beginning, these two platforms are developed from third-party companies, and they offer the platforms to the brokers, to the exchanges, and they offer those platforms for free to us, the clients, the traders. Which means that you can use MetaTrader 4 on many brokers, and at the same time you can use TradingView on many exchanges and brokers. And this is pretty cool because by having just two platforms, you actually have the chance to trade on many brokers or on many exchanges. So the first important thing when we're talking about TradingView versus MetaTrader 4 is the fact that both have web versions, which is pretty cool, but MetaTrader should be installed on the computer if you want to trade with expert advisors or the so-called robots. You cannot trade robots on the web version of MetaTrader 4. Now, TradingView, they have some algorithmic trading as well, some ready patterns, and you can backtest some strategies, but for algorithmic trading, I personally prefer to use the MetaTrader 4 platform, which is well known in this field, and it's the trustiest platform for algorithmic trading. It has the backtest. We have the opportunity to trade with many expert advisors, actually up to 99 for one MetaTrader, and you can install many MetaTraders on your platform, which gives you the freedom to trade with hundreds of expert advisors at the same time. Expert advisor stands for robots, alright? So I can say that you can trade as many robots as you wish on the MetaTrader platform, which is not available on TradingView yet. Now, I personally use TradingView for technical analysis and price action trading because it has many features. I like how it looks like. I'm following all the cryptos in there, all coins and altcoins that I'm trading on different charts, and it's super comfortable for me to play some alerts when the price crosses a certain level. It gives me a signal on my email. For example, if I wanna know when the Bitcoin crosses the $50,000, I can put an alert. I have a few alerts over here, some of them triggered, but I can easily set, for example, Bitcoin crossing 50K, and all I need to do is to place the level. If I hit on create, it will drop me the alert right over here, and once the price crosses the 50K, it will send me the notification, which is pretty cool. And this is one of the many features on TradingView. The best thing I like about the platform are all those drawing tools that we have, and it looks really nice. We have the dark mode and we have the light mode, and I personally prefer to use the color theme. actually to be a dark one. On the other hand, MetaTrader 4 looks a little bit old or outdated, and in some of my videos I have the comments and the feedbacks that I'm using an outdated platform. Actually it's not. This is how it looks like, okay? The Market Watch, the Navigator, and this platform was created about a decade ago, and they really didn't update the interface. This is why it looks a little bit outdated compared to TradingView or most of the platforms that come from the exchanges. But keep in mind that MetaTrader was developed long before there was the Bitcoin at the first place, okay? So it's a very well tested platform that was used initially for Forex, but now the Forex brokers offer stocks, they offer cryptos with CFD trading, okay? Contract for differences. So most of the brokers that offer actually cryptos and stocks, they offer CFD trading and not real stocks and not real crypto to buy and to sell. Now, some of the MetaTrader platforms offer real stocks, but this usually is on MetaTrader 5, and I will show that later in the course. Alright, so this is the main difference between the two platforms. I use them both. I prefer MetaTrader for algorithmic trading and I prefer TradingView for manual trading. It's a personal choice which one you will be using. A little bit later in the course I will show you how to install MetaTrader for algorithmic trading and start step by step. You can use it as well for manual trading, but because we are focusing in this course on algorithmic trading, I will stick to MetaTrader. It's free to use, you can install it without any issues and practice on a demo account so you can test the expert advisors that I have included. Alright, thank you for watching and I will see you in the next video. So why MetaTrader 4 is the most popular platform for algorithmic trading? First of all, there is MetaTrader 5 as well, but still MetaTrader 4 is the most popular platform and I use it. Most of the traders still use MetaTrader 4. And later in the course, I will show you how to start using it step by step, and you will see that you cannot download it from the official website because they are trying to push the clients towards MetaTrader 5. However, tough job for them. Still, we, the traders, prefer to trade on MetaTrader 4. So MetaTrader 4 is really simple to use. I will dedicate a complete section to this platform. As I already mentioned, it is well known for algorithmic trading and it was developed a long time ago. So all the features about algorithmic trading, the backtests, the robots, the signals and the way they execute the trades were tested for a long time, okay? Many years, thousands and thousands of traders, algo traders just like me, were using this platform, and a lot of bugs and issues that were out there were fixed basically because of the community. They have a forum and there are quite many topics out there, so the people were reporting to the platform, to the team, and they have improved it. Another thing to bear in mind is that MetaTrader is an expensive platform. Okay, the last time I visited one of the Forex expos in Cyprus, the cost for one MetaTrader platform for a broker was about $75,000 per year. Okay, so the brokers pay $75,000 a year to the MetaQuote company, which is the developing company from MetaTrader 4, to offer this platform to their clients, okay? And many brokers use MetaTrader 4 and MetaTrader 5. So imagine MetaQuote's company, they have a lot of money, okay? And they can afford a huge team to develop it, to improve it, to update it. Again, I say it looks outdated, but I guess they just put more efforts to the background of the platform, to the source code, how it works, rather than upgrading it to some fancy Outlook just like the crypto exchanges do nowadays. However, the interface doesn't really matter for me as long as I'm able to trade with robots and I know that these robots execute the trades at the right place. For example, I had the signal from this euro-pound strategy, which I will show you a little bit later in the course, and I wasn't looking at the screen. This happened actually overnight. I was sleeping and I'm confident that the robot took the trade at the exact place and the robot placed the take profit for me. So to make it simple, I somehow feel comfortable using the platform with robots, okay, because I know that it works. I have tested it. Again, thousands of traders have tested it. It is free to use, which makes it available even for complete beginners. If you're not planning to invest any real money, but you just want to practice, you can simply install the platform, open a virtual account, so you won't be risking your real money, and practice. You can do this for years if you want, as long as you will be comfortable one day to start real trading. All right, so if you have any questions, of course, let me know, but I will stick to MetaTrader 4 in this course because, one more time, it's a very trusted platform for algorithmic trading. Now, MQL is the programming language for MetaTrader 4, and I will show it to you straight away. If I go to any of the expert advisors and I right click, I will select modify. This will open the meta editor, and the meta editor is where the developers are writing the code of the expert advisors. So here it is. You will see that it looks pretty similar to the MetaTrader, but it opens in a different tab, in a different window. So this is basically the code of the expert advisor. You can see all the parameters right over here, the stop loss, the take profit, the indicator values, and then we have the complete strategy below. As you can see that this is not a short code, right? It's a lot of work to write all of that. And the thing is, you need to know trading as well, not just programming. And this is a huge issue that I met before in many forums that I was following about MQL. Many developers want to code a profitable strategy, a profitable robot, but they have no idea about trading. And I used to work for a company where I was trading, but at the same time I was giving to developers to automate the strategies and MQL. And it was a horrible thing because they simply didn't understand what I mean. And if you have friends who are developers, I have many, luckily, one of my best friends are developers, their thinking about the life in general is different, right? Very smart guys, but they are looking at always from the side of the code. And I was on the other side looking from my trading perspective, and it was really hard because I had to order the strategies to them and they had to code them. They then were giving it back to me. I had to test it. There were always issues. I was giving back the expert advisors to fix it all, and it was a horrible experience. So usually what happens is, if you want to have a profitable robot, you have a few options. One is you learn trading and programming at the same time, which is pretty time consuming. For me personally, to learn how to code, it's not worth it at all. Second option is to buy the expert advisor from the marketplace, which I'll be talking about in the next lecture. And three, there are some ready solutions like strategy builders. For example, personally, I use EA Studio, FSB Pro, and a few more, where we are able to automate the strategies without programming skills, okay? We just put the inputs and with a few clicks we can export the strategies, but these are professional tools that I use. Most of them are quite expensive, by the way. So the MQL language is specially created for MetaTrader 4 and 5 robots. One more time, it is quite a hard thing to be done, especially if you have no trading skills, not just developing skills. So just programming might not be enough at all. But the real concern about MQL is that it is a language of one company, okay? This MetaQuote company that has developed the MetaTrader, and this MQL language is not usable on any other platform or company, which makes it, personally for me, kind of useless to start learning this language because it works just on one platform. Yeah, it's a huge platform, many traders and brokers are using it, but I personally feel it's not worthy to learn MQL programming language. But this is my personal opinion, of course, and from my experience, I found out that I better buy ready robots or use the strategy builders that I've mentioned, which are a great solution. But no worries, in this course you already have downloaded a ready-to-use expert advisor, so you don't need to go through all of that I've mentioned, and at the same time you can have a look at the code. If you are a developer and you want to learn more about programming on MQL, you can use the code of the expert advisors of the robots that I provided you with, so you will see how exactly they are coded. And when I include expert advisors in my courses, I include them with the source code, because usually when you buy expert advisors or robots from the marketplace, you don't get the source code, you get the ready ex4 file for trading. So going to the marketplace in the next lecture, you will see from where you can buy expert advisors if you decide to. Hello everyone, it's Petko Alexandrov, and in this video I will continue with the marketplace for expert advisors, or the so-called robots. Now, first of all, if you start looking for robots over the internet, you will find hundreds and thousands of websites, and I know it's really hard to decide from where to buy, what robot to buy, because you will see that some cost a few dollars, another cost thousands of dollars. And the first thing the beginners believe is that the more expensive the expert advisor is, the more profits it will make, but that's not always the case. So if you look at my screen, I'm on the official website at mql5.com. This is the official website from MetaQuote company that I already shared. This is the company that has developed the MetaTrader platform. So on the top we have the market. If I click on it, you will see so many expert advisors, okay? Hundreds, thousands, I don't know how many there are on the marketplace, honestly. And you can see that some cost within $100, others $600 and $2,500. And it's a real mess, okay? You will really get lost if you start looking at all of those robots, and you have to be very careful over here, okay? I have tested many of those robots and unfortunately I lost some money, but this was when I was starting trading and starting algorithmic trading, because first of all, these robots are on the marketplace. This is the thing you need to bear in mind, okay? Those developers are selling the robots. They are not trading your accounts, they are selling the robots to you, so they make money when people buy their robots. Okay, so we are moving from the trading point of view to the marketing point of view here. And obviously some of them will sell it to you very well. They will promise unrealistic results, great backtest results, which are easy to manipulate. And when going through the marketplace, you really have to be skeptical, okay? And there are a few things, of course. If I click on any of the robots absolutely randomly, okay, the choppiness direction, you will see that there are a few options. You can test a free demo, which is pretty cool. Then you can have 1 month, then you can have 3 months. So I would suggest you, of course, to test the robot for a few months so you can see how it works. If you can understand more about the strategy behind that, would be even better. Read as much as you can. Have a look at the reviews and the ratings. Make sure that the robot you select have a lot of reviews and ratings, and quite important, not only on that website. Try to find a community for that robot on any social media like Twitter, Reddit, Discord. So you will see that actually people are making money with that robot, because as I said, it's easy to manipulate all of that on the marketplace. If I switch to another robot, clicking very randomly on those, not promoting any of those robot guys. I don't know these robots, I don't know the people that are selling them, but I just want to share with you how you can just test it safely, trying 1 month or a free demo, going through their social media and see if those guys are actual traders and developers who stand behind the robot and manage it, keep it up to date, because the markets change. And this is quite important thing that I have to mention at the end of this lecture, that even one robot is profitable until the moment, there is no guarantee that it will continue profiting in the future, okay? Because the markets change. This is why when you buy a robot, if you decide to buy a robot at any moment, you need to be sure that there are people behind this robot taking care of it, and they will actually manage it, they will update it, they will send you notifications whenever you have to do some changes in the settings. There are some trusted companies that I have used, and I'm in this field for quite a long time. Honestly, I have many connections and people that are sending me even robots just to test them and tell them what could be improved in their robots. But personally, one more time, I'm not buying robots from the marketplace anymore, because it's just time consuming to test it. It's a lot of money sometimes you spend for nothing. I used to do it, but now I prefer to create the robots by myself. And I don't want to make you frustrated with this lecture. I just wanted to give you some pros and cons when you are purchasing expert advisors from the marketplace. But take it easy. Along the course, you will see exactly how the expert advisors work. You will see how to place them properly on the MetaTrader platform, how to backtest them, and how to test them safely on a demo account so you won't be losing any real money. So take it easy, don't hurry now to jump on the marketplace and choose some robots. I would suggest you to finish this course. You already have ready to use expert advisors that I'm personally using for my trading. So if you like them and you find yourself comfortable trading with them on your broker, you might not need to buy or look for different expert advisors, because you can use the ones you have from me in this course. Alright, so now it is time to get to the trading. I will explain the MetaTrader platform in details. You will feel comfortable by the end of the course using it, and you will see that it's nothing complicated. So stay with me and let's go together in the next lectures. Hello everyone, it's Petko Alexandrov. Hope you are doing well, and in this section I will talk about MetaTrader platform. I will explain it in details, and as a trader I believe that everyone using the platform should feel comfortable with the platform when using it. So at any moment you can react, because this is the market. Sometimes things happen fast and you need to know what you are doing, and especially if you want to take an action manually and not using the robots and the expert advisors, you need to know what to do. So I decided to dedicate a whole section in this course on MetaTrader platform, and if you're familiar with the MetaTrader platform, you can simply skip that section and go straight away to the algorithmic trading and the strategies for Forex, for crypto, for stocks. And I personally feel this is the most interesting part of the course, but I have to explain the MetaTrader in details, because this is the platform, this is where you will be trading, this is where you will be putting your money if you decide to trade with real cash. When I start using a new platform, doesn't matter for what market, I first experiment with it. I learn the details before I actually trade on that platform, because I want to feel comfortable later on when I am trading with real money. So one more time, in this section I will explain the MetaTrader in details and you will feel comfortable. And if you haven't used it, I would suggest you to go through all of the lectures so you will feel comfortable later on in the course. And after that, if you decide to use the platform, you will know exactly what you can do and how you can do it. And of course, if you have any questions about the platform, you can always ask me along the next lectures. We'll see you straight away in the lecture where I will show you how to download it and start with the MetaTrader platform. In today's video, I will share with you how you can download MetaTrader 4 on your laptop, computer, whatever machine you have at home. So first things first, I want to make something very clear because we receive a lot of questions about it. MetaTrader 4 is not available on the official website at mql5.com, and I know many beginners are frustrated because they go to the official website to download the platform and they cannot find it in there. This is because they want to push all traders towards MetaTrader 5. However, MetaTrader 4 is still the preferable platform. I personally still use MetaTrader 4, and I use MetaTrader 5 just trading stocks. But for Forex, crypto, commodities, I prefer MetaTrader 4. It's more convenient for algorithmic trading and I'm just used with it, okay? So MetaTrader 4 is still out there. It is supported, but you need to download it from a broker's website and not from the official website. One more time, it's not available right here anymore. And if you don't know from where to start choosing a Forex broker or from which broker you can download it, you can check out our website at eatradingacademy.com and go to brokers. Okay, we have created this page for everyone wondering which are the trusty brokers. There are some tips that might help you as well, and we have some trusty brokers, exchanges, more regulated brokers. I have asked my team to write detailed review for each one, and you can compare them according to the regulation, the spread. We are very honest writing the review, so we always bring out some pros and cons. And of course, it depends where you are located to find the suitable broker for you. Make sure it's easy to fund the account, to withdraw money. But one more time, we don't give it as a suggestion or something, just want to make it useful for everyone. Now, for the purpose of this video, I will use Black Bull Markets and I will click open account, and it will bring me to their website from where I'll be able to download MetaTrader. Alright, so it's a lot of information right over here. I will go straight to platforms, and here it is, MetaTrader 4. There is MetaTrader 4 for Mac, iPhone, Android, for tablet or iPad. There is the MetaTrader 5 and there is the WebTrader. So I will click on MetaTrader 4, and there is some information right over here. MetaTrader also offers support for expert advisors. This is what I like the most. As you know, I've been trading with expert advisors for quite a long time. I will click on download MT4 for Windows, and here it is, simple as that. One click and we have the installation file. Alright, so it's super simple. There are the terms and conditions. I would suggest you to go over them if you'd like to. And if I click on next, the installation will be complete. Now, if I click on settings, I want to show you that right here you can change the installation folder. This is useful if you want to install more than one MetaTrader platforms on your computer. Okay, you need to change the installation folder location, and a second MetaTrader will be installed, a third one, fourth one, and this way you can install many platforms. I think the maximum is 32 platforms per laptop or computer. If I'm wrong, please correct me in the comments below. Now I will click on next. I will leave it to the default directory, and you will see that it takes just a couple of seconds to install the MetaTrader platform. And from there, you have the option to start trading with live or a demo account. For the beginners, demo account is a virtual account, so you won't be risking any real money. You can open an account, for example, with $10,000, $50,000. Different brokers offer different amount, and I will tap on finish, and it brings me back to the official website. But one more time, I find it useless when it comes to downloading MetaTrader 4 because it's not available in there. Okay, so now the MetaTrader platform will open. Here it is, and you see that I have the option to open a demo or a live account. I will click on next, And here I can enter the login details if I have an existing trading account, or if I want to open a new demo account, I will click on next, and you will see that I will just need to write my name, Petko Alexandrov. I'll be using my personal email, phone number, not a must, and you can select what a deposit. Let's say I want to start with $10,000. You can change the leverage right here. Let me switch to 1 to 100. I will agree to subscribe to their newsletters. Let's see if they have something. Actually, I will need to put down my phone. A tip here, you don't need to put your real phone, okay? If you don't want to get interrupted from the brokers. Now, Black Bull Markets is a regulated broker. They won't start scamming you over the phone, but just in case, you can drop any phone number right there. And I will click on finish, and here it is. This is my login, my password, and the investor password or the read-only password. If you want to share your account with someone who wants to monitor, you can do it this way. I would suggest you to copy those somewhere on the side, and if I click on finish, you will see that I have an active trading account. Okay, here is the market watch on the left side, where I can see the quotes moving, the bid and the ask price, which means that I am connected to the server of the broker. In the bottom right hand corner, I can see the connection status, and if I click on trade, I see my balance. So now I am ready to open trades, to practice different strategies, to experiment with expert advisors and algorithmic trading. Whatever you're planning to do, you have a decent platform, okay? Because MetaTrader platform, especially for algorithmic trading, is the best platform until the moment. It looks kind of old, and in many of my courses, some beginners comment that I'm using outdated platforms. Actually, it's not outdated. This is how MetaTrader 4 looks like in the last, 10 or 15 years, okay? They just didn't upgrade it, and I know it's different from many crypto exchanges and web platforms that the brokers offer now, but it is still the trustiest platform for algorithmic trading. Is the most popular platform because the brokers offer for free. Simply, the MetaQuote company has developed the platform, but the broker, in this case it is Black Bull Markets, pay MetaQuote for the platform, and it offers the platform for free to us, the traders. But this is how easy it is to install the platform. You just need to select a regulated and a trusty brokers like Black Bull Markets, and you are ready to go. In this video, I will share with you how you can place a trade on MetaTrader platform. What are the different options? Now, the easiest way to place a trade on MetaTrader is to use these one-click trading boxes. This is called one-click trading box because if I right-click over the chart, you see that I have the option to uncheck one-click trading, and this will make the box disappear. If I right-click again and I go to one-click trading, you will see that the box appears. So with this box, we see two things. We see the price at which we can sell and the price at which we can buy. And as you can notice, the prices are different. This is because we have a bid price and an ask price. The bid price is the cheaper one at which we are selling, and the ask price is the more expensive price at which we are buying. Okay, the difference between these two is called spread, and this is what the broker benefits from our trading, right? Just like the exchange bureaus or the banks, before you go to a vacation or to foreign country and you want to exchange one currency for another, you can buy it from the bank or the exchange bureau, and there is a difference between the bid and the ask price as well, right? This is how usually those brokers and exchanges make money. Now in the middle we have the lot. The lot is the quantity we want to be trading. So one lot in the forex trading equals to 100,000 units. So if I want to buy one lot of euro dollar, I'll be actually purchasing 100,000 euro versus the American dollar. And of course, if you want to trade a smaller amount, you can decrease the lots to 0.05 or 0.01. You can choose 0.1, for example, which will equal to 10,000 euro versus the dollar. And let me demonstrate it to you. Let's say I'm following some strategy that shows me that currently the trend is going down, euro dollar is going down, so I decide to sell it. I will click on sell, and here is the warning with the disclaimer, which appears just one time right after you install the platform. If I click on I accept these terms and conditions and I click on OK, I won't see this disclaimer anymore. So now if I click on sell, the trade is executed immediately. I can see it below in the terminal. So you saw that I actually executed this trade, or I placed this trade with one click. And this is why it is called one click trading, this box, because we can sell or buy with a click of a mouse. Alright, so what are the other options to open trade or to place a trade on MetaTrader? You can right click over the chart and you can go to trading, and here you have the option for a new order. Now here comes a box with more details about what type of order you want to have. Is it market execution? So the one-click trading is a market execution because I click sell and the broker executes the trade at the market price, or this is the current price we have in the market. Alright, so if I click on the order type, I have a second option which says pending order. If I select it, you will see that a new box opens below, and now I have 4 different types of pending orders. One is called buy limit, which means that I can set a price lower than the current one, and if the price reaches this level, a buy position will be executed. For example, currently we have the price at 117.66, so if I select 170.60, I will click on place, and you will see that this pending order is below at 117.60, okay, and currently we have 117.66. So if the price drops, let me close this open position. I just wanted to demonstrate how this one-click trading works. It's on a loss, really doesn't matter because this is a virtual account that I have opened for the purpose of this video. So now I have left with the buy limit order, which one more time will execute a buy position if the price reaches the level at 117.60, which is just 6 pips lower, very possible for the price to reach the level while I'm recording this video. And let's see if this will happen or not. And during this time I will explain the other types of pending orders. Okay, so buy limit, one more time, means that we set a level lower than the current price at which we want to buy. And as well we have the option for expiry. So if you want this to happen by the end of the day, but you don't want to leave such an order for tomorrow, you can just set an expiry by the end of the trading day. Okay, the next option is sell limit, which obviously is the very opposite thing. We can set an order that will execute, for example, let's squeeze the price right here. I will put it at 117.70. Okay, I will click on place, and you will see that now I will switch to M15 so we can see better. We have a sell limit on the top, a higher level, which will execute a sell trade or a short position if the price reaches this level of 117.70. So guys, this is not a trading strategy that I'm showing at the current moment. I'm just explaining how to place a trade on MetaTrader and what are the different options you have. Okay, so let's see which one of the two the price will reach first. And again, I will go to trading, new order, and the other two options are buy stop and sell stop. So the buy stop is the option to place a level on the market higher than the current price where we want to buy. For example, if I set it to 117.80 and I click on place, we will see the order here, but this is a buy stop, or if the price reaches this level, it will open a buy position. Okay, so it's kind of opposite to the buy limit, because with the buy limit it will still open a buy position but on a lower level than the current price. Okay, and the fourth option, as you may guess already, is the sell stop. Here it is. So that's a level we can place lower than the current price. So let me place it on 117.50 and we will see the order right here, and this means that we will sell euro dollar at this level, which is lower than the current price. And now the price is going very close. Yep, exactly, it executed this sell limit, and you see that once the price reached the level of 117.70, it opened the short trade automatically. So I didn't wait with my mouse on the sell button to wait for 117.70 to be reached and to sell it manually, but it happened automatically by using those pending orders. And why those are useful? First of all, I don't need to sit in front of the computer and to wait to tremble with my finger on the mouse to execute at the right price. You see that if you want a certain price, you can set it up with a pending order and it will execute at that price. And this is actually a good sign of a decent broker, that it executes the pending orders exactly on the price you want. Okay? If you notice that your broker doesn't execute pending orders on the prices you want to have, then there is something wrong with that broker and you better look for a new broker. Alright, so these are the different options MetaTrader offers. Of course, you can use expert advisors or the so-called robots that we show in our courses and we use for our trading in Trading Academy, because they execute trades based on different strategies fully automatically, but this I'll be talking about in another video. For the current moment, I wanted to show you how you can use the one-click trading on MetaTrader, or how you can place pending orders. One more time, 4 different options for pending orders: the buy limit, sell limit, buy stop and sell stop. And pretty much this covers all possibilities of placing an order on MetaTrader. If you want to buy on a higher price, then you need to use the buy stop. If you want to sell on a lower price, you need to use the sell stop. If you want to sell on a higher price, you need to use the sell limit, which was demonstrated in this video. And if you want to buy on a cheaper price than the current level, you can use the buy limit. Hello everyone, it's Petko Alexandrov, and I continue with a video where I will show you what is a stop loss and what is a take profit, how useful they are in trading, and when it is suitable to use them. And later on in the course you will learn how I define what stop loss and take profit to use as value from my strategies. So in the previous video I have explained how you can place a trade on MetaTrader. I showed the different types of orders, and I have left 2 orders, buy limit and buy stop, and they were both executed, and you can see that these are open trades that brought me profit of $64 and $84 until the moment. But these 2 don't have a stop loss and a take profit. So if I zoom out the chart, for example, to the hourly chart, you will see where the trades are, down here. So you can see that the price went up in my favor and I'm already on a profit. Now we have 2 options. One is to close the trade manually. If I press this X button, the trade will close. Here we go. And I will have profit into my account history. here it is. The trade was open at the price of 117.60 and I just closed it manually at 118.44. So I have profit of $84.20. The other trade that opened, I might want to use a stop loss or a take profit. So it depends what your strategy is, but the stop loss and the take profit allow me to set levels at which the trade will close automatically, so I don't need to stay in front of the computer or the screen to close the trade manually. For example, I might have one level, let's say at 118.90, because I'm just giving a random example, but we see that the price already reached 180 a few times, like 1 time, 2 times, 3 times, 4 times, 5 times, which obviously means that this level or this zone right here is an important resistance level. The buyers are getting weaker and the sellers are getting stronger at this zone. So you might want to decide that if the price reaches again to 180.90, you want to take the profit, okay? Or you want to close the trade automatically, so you will collect this profit, okay? Let me make it green. And on the other hand, you might want to put a stop loss at a level where you will be happy closing the trade at a level lower than the current market price, okay? And I will make it red because it is a stop loss. Here we go. And if I put this level below the entry price, so my entry price is at 117.80. If I put this trade on 117, let's say 65, I will have a loss of 15 pips, right? If the price drops down below this level, I will have a loss. Now, if I want to have a stop loss at 118.20, for example, the trade will still close, but I will close on the profit because my entry price is 117.80. So I will have a profit of $40 if the price drops down to this level and the trade is closed automatically. Alright, so this is the idea of take profit and stop loss in Forex trading on MetaTrader. I explained them super simply. So in the next video, I will share with you how you can place the stop loss and the take profit to an open position, or to a position that is pending, or to a new position that you are going to open. Dear traders, I continue with the video where I will show you how to set the stop loss and take profit with a pending position or with a new position you are about to open. It works really simple, so let's go for it. Now, I currently have one trade opened on euro-dollar at the price of 117.80, and the current price sits at 118.47, so we are on a profit with $67. And this is in the case where I'm trading 0.1 lot size, and in another video I will explain all of these trading terminology like lot size, margin, equity, all that might be unfamiliar to you if you are a complete beginner in trading, so no worries about that, we'll get to it. So the question now is how to set stop loss in MetaTrader 4 if you have an open position. So if you have bought, if you have sold, and in the terminal you see stop loss and take profit set to 0. What I will do, I will right click over it and I will go to modify or delete order. No worries, you won't delete the order, just click on that and you will see the boxes. Alright, so here you can use the arrows to increase it, but obviously it will take you ages to reach to 118 or something. So what you can do is just mark it and then type the value, for example 118.20. Alright, and if I click on modify the number of the orders, so here on the left side we can see the number of the order, and I will click on that and you will see that my stop loss is set. Now here I have this horizontal line which I will remove so you can see clearly where the stop loss is. So this is how simple it is to set stop loss in MetaTrader 4, all you need to do is to choose the level at which you want to place the stop loss. In this case, if the price hits the stop loss, we will be on a profit. And if I put the mouse on it, you will see that it says profit $40, and below we can see pips 400, but actually it's 40 pips and 400 points. Alright, this is because the entry price is 117.80, and if we put the stop loss at 118.20, we will have the profit of $40, or the difference in 40 pips. Alright, so the stop loss simply is a level that we set below the open trade if we are in a long trade, if we have bought, where we will be happy closing the trades in order to take some profit. And in the very same way, we can set a take profit. For example, we can set it to 190.20, and I will modify. You will see the take profit right here above. So if the price reaches that level, we will have profit of $140. Now, something very interesting about the stop loss and the take profit, you can drag them, okay? You can move them that way. I can move it lower, and you will see that it was moved down to $112 of profit, or 112 pips above the open price. Okay, so it really depends what your strategy is and what is your money management in the account. All of that I will explain later in another video. But to summarize it one more time, when you have an open position, you can put a stop loss at a take profit, so the trade will close automatically if the price reaches one of the two levels, and you don't need to stay in front of the screen to wait for this event to happen. Alright, so how to set stop loss in MetaTrader 4 on a pending position. Right here I have one sell stop on euro dollar, this one over here that I've placed randomly in the previous videos. But let's say you want to sell euro dollar with a pending position, so again you won't need to wait for the price to reach that level. You can modify, and the stop loss should be above the entry price this time, because this is a sell position. Okay, so if the entry price is 117.50, I can set a stop loss at 117.60, for example, and I can set a take profit at 117.30. And if I click on modify, you will see them right over here. So this is the stop loss. If I put the mouse on it, you will see that it says negative $10 as a profit. And if I put the mouse on the take profit, again you will see that we will have profit of $20. Okay, so this is a sell trade. The stop loss is above, the take profit is below. Now this one over here is the buy trade, and here we have a take profit higher. A stop loss should be lower, right over here, for example, but because this position is already on a profit, I can put the stop loss higher than the entry. For example, I can put it really close right over here, and if the price drops and closes the trade, we will be out with a profit. And actually I will try to demonstrate that if I switch to 1 minute time frame, and here it is. So every candlestick represents 1 minute. I will move the stop loss very close to the current price right over here. So you will see that it's marked already in red, which gives me a warning that it is very close to the price. So if I put the mouse on it, you will see that if the trade is closed, it will bring me a profit of $64.40, and probably this is about to happen as I see the market going a little bit negative in the short term on the 1 minute time frame. So let's see if this will happen. The price currently is 118.45. The stop loss is 118.44, so it's about 1-2 pips for the trade to be closed. So I just wanted to demonstrate it. I will try to put it even a little bit closer. Okay, here we go, very close to the price. Usually I don't do it that way, and here we go. Yep, it is closed. Now if I go to account history, you will see that the stop loss closed that trade and it's on a profit. So at any moment you can squeeze the position, right? You can put the stop loss very closely, especially if you see it going negative. So this way you're giving it a chance to go higher, but at the same time, if it drops further lower, you don't want to lose the profit, and you can use that method of setting the stop loss very close to the position. Okay guys, so this is how easy it is to set stop loss in MetaTrader 4. Same with the take profit. You can do it for open trade, for a pending trade, or as well if you want to open a new trade. All you need to do is go to trading, new order, and here are the stop loss and the take profit, and you can place the trade with a stop loss and the take profit. And you see how negative it went after that on 1 minute time frame. Alright guys, so thank you very much for watching. If you have any questions about setting a stop loss and a take profit on MetaTrader 4, let me know. I'll be super happy to answer you, and I will see you guys in the next video. Alright guys, so I continue with a video where I will explain more about the trading terminology, because I know that if this is your first time watching a forex trading course, it might sound complicated. Probably I'm using some terms that you don't understand, so I will do my best in one video to explain it super simply without boring slide PDF, show videos and stuff like that, which I'm not a fan of. I usually prefer to record my trading screen and show it all by demonstrating how it works, so you will understand it and you will be able to apply it easier on your trading screen as well. Alright, so the trading terminology for beginners and for advanced traders is a lot, okay? We can cover a lot. You won't need all of them. Honestly, you will need maximum 10 terms in your trading that you need to know, you need to understand, and you don't need to go into details about some terms that you will never ever need. So I will explain it super simply, and I will start from the broker one more time, where I've mentioned a virtual and a demo account. So Black Bull Markets is a broker, and some people think this is a person, but it's a company, okay? A company that offers the MetaTrader platform, and we have access to the market via this platform or via the servers of this broker. Okay, as in account types, we can have a virtual account, which is recommendable at the beginning, or a demo account. It comes from demonstration. So basically you are simulating live trading, and is very suitable if you're a beginner, because you will be practicing without risking any real money. At the time when you're ready to risk real money, when you're comfortable risking some capital, then you can open a live account. So every trade will be with real money, and you might gain profits, but at the same time you can handle losses. Okay, so that's the difference between the virtual and the live account. And when you're using a virtual or a demo account, you don't own this money to anyone. They are virtual, so you can always restart your account and practice again and again until you see constant results. And below are the indicators. Now, what are the indicators? These are different lines, different drawings over the chart. We have some histograms. For example, if I put the MACD indicator, which is super popular, you will see those bars below the chart, and these indicators help us to build a trading strategy, or in other words, they give us signals so we know when to buy and when to sell. Because if we don't have indicators, sometimes it's hard to know if we are in a bull market or in a bearish market. Okay, I will explain the bull and the bearish in a second, but what I wanted to show you is, for example, this period over here. You see, if I don't have the indicators, I will just remove them right now. Okay, if we don't have the indicators, we have the candlesticks, and we see the market going up and down and up and down. And for example, at this moment, are we buying or are we selling? It's really hard to say without the indicators. But for example, if we have the MACD indicator, which gives us a signal, or it gives us the idea if the market is positive or if the market is negative. For example, when the MACD is above the zero line, so right here is the zero line, and we have these bars which by connecting each other form the MACD line, and the red line is the signal line. But when they are above the zero line, with simple words, the market is positive, so we might buy. And you see that after that the price went positive, okay? Because of that information having from the indicator, we can take a decision easier. Okay, now there are varieties of indicators. They are calculated with different formulas. It is a little bit more advanced with the indicators. I will cover them in another video. Okay, below we have the expert advisors in the navigator. So expert advisors means trading robots. Probably you have heard trading robot, and the official term is expert advisor, or it is an EA. So the expert advisor again is not a human, that is a code that represents a strategy, and by using this expert advisor we can open and close trades automatically using a robot. Or in other words, the expert advisor is a coded strategy and it executes the trades automatically. We have some by default. I will include free expert advisors in this course so you can practice along if you wish to. Now, below in the terminal, we have the balance. So this is the amount you have in the account, right? And then you have the equity, which equals to the balance right now because I don't have open positions. And then we have the free margin, or this is the free amount that I can trade with. And if you have noticed, when I had open trades, I had some free margin and I had block margin. So I will open a trade right now just to demonstrate it to you. I will randomly, for example, buy euro dollar, one click trading. I have opened the position, and what you can see is that for 0.1 lot size I used $23.69. So this is the amount that I have used from my account. Okay, and what is the lot? Because I've mentioned it. This is the trading amount. In Forex trading, one lot represents 100,000 units. For example, in this case, 0.1 would represent 10,000 euro versus the American dollar. This is how much I'm trading right now. Okay, 0.1 lot is the terminology that we use in trading. And you see that the rest is the free margin. So if you are trading 0.1 lot, basically you will need $23 from your account. And as well, this depends on the leverage. So the leverage is how much money you borrow from the broker to open bigger positions. For example, in our case, I have opened $10,000 a virtual account, and if I use leverage 1 to 100, means that I can open trades 100 times bigger than the amount I have. If I use leverage 1 to 2, this means that I will have the ability to open positions up to $20,000. So $10,000 come from the broker, but it's not a loan that I'm taking. They just borrow the money to open the trades. Obviously, the bigger the leverage is, the more risk you are taking into your account, and at the same time, the more profits you can gain. Okay, so be careful when using a higher leverage. So when we use stop loss for the position, for example, if I put a stop loss at 180.22.5, I will click on modify. You will see that I will have a stop loss exactly 20 pips lower, or this is $20 lower. And I'm using $23 from my account, but I'm not risking $23. In this case, my total risk will be the amount of the stop loss, okay, $20. If I move it closer to, let's say, $10, somewhere in the middle, what is it? I put it randomly. $11.16, it means that I'm risking actually $11.16, but I have used $23.69 to open that position. So the margin is not how much you are risking. And actually, if the position goes more on a loss and you're not using stop loss, you can see it might go really on a bad loss. If I put the stop loss here, you will see that I will handle much more than the amount I have used to open the position, right? So the margin, one more time, is the amount we use to open the position. A little bit earlier I have mentioned bullish and bearish. Alright, so the bulls and the bears are popular in the stock market, but as well in the forex. So when the market is positive, when it's going up, I will switch to daily chart. When the market is going up, we say that it's bullish. Okay, the buyers are stronger than the sellers. And when the market is going down, we say that the market is bearish. Alright, and probably you have seen those pictures with the bull and the bear. So the bull pushes up and the bear pushes down the market, okay? And there are those famous statues in New York that probably you have seen. So it's simple as that, okay? When the market is going up, we say that it is bullish. When it's going down, we say it is bearish. Another thing related to the position and the direction is when we buy, we say that we open a long position, and when we sell, we say that we open a short position. And it's not related with the time, like how long time we will hold the position. Is it a long time or is it shorter time? It's about the direction. Are we buying or are we selling? Alright, and the last thing I want to explain in this trading terminology for beginners and people who have no experience on the market video is about the bid and the ask price and the spread. So on the market watch, you can see that we have two columns with different prices. For example, euro dollar has two prices, 118.40 and 118.41. So the bid price is the price at which we are selling, and the ask price is the price at which we are buying. For example, this trade that I opened randomly to explain about the margin, I have bought at the ask price at that moment. And when I'm closing it, for example, right now I will close it, it will close on the bid price out there, right? So this way, the broker benefits the difference, which is known as spread, and this is the third column right here. Okay, if I click over the market watch, you can see that it's checked. If I uncheck, the spread will hide. I usually prefer to keep it checked because I can monitor at any moment how much is the spread. So when you're looking for a regulated broker, always make sure they have a small spread. And usually when the broker has very low spread, they have commissions. And in our case, this broker, the Black Bull Markets broker that I have selected to use, doesn't charge commissions. That's why their spread is a little bit higher than 1 pip, but no commissions. And most of the time, other brokers are promoting themselves with very low spreads, even going to zero, but they charge commission. And at the end of the day, it is the same thing. But as long as your broker is huge, it is regulated, like the Black Bull Markets, you won't have issues with very huge spread or commissions. But always keep an eye on that, okay? And the last thing here is about the pips and the points. Now, euro dollar sits at 118.37, and you see that there is one last digit, 57. So this is the point, okay? And usually when we are saying or when we are pronouncing the price, we don't say this last digit. We say the euro dollar is 118.37. So 37, 38, the third and the fourth digit, this is the pips, and the last one is the point, which is a very small fraction of the price. And you can see it right over here on the right upper hand corner in the one-click trading box, that it is very small, but the main thing that you should be focusing are the pips, and as well when we are taking profit or setting stop loss, we look at the pips. Are we getting 40 pips? Are we getting 20 pips? How many pips we gained or we lost? Alright guys, so this is the trading terminology that you need to know as a beginner. Nothing more. Along the course, probably I will mention some more so you will feel comfortable when using and trading on MetaTrader platform or on any other platform. The terminology is the same. So if you have any questions, if you don't understand anything, let me know. I'll be super happy to answer you, and I will see you guys in the next video. Take care. Alright dear traders, I will continue now with a video where I want to show you what are the forex indicators, how useful they are, but at the same time what are the concerns when we use indicators and what you need to know. So in front of me I have the euro-dollar chart on 1 hour, which means that every candlestick represents a 1 hour. And this is a plain chart. We don't have any indicators. And if you are a beginner, probably the chart doesn't mean anything to you and you are frustrated. But even if you are advanced, even for me sometimes, when I look at the charts, I don't know, is it a good time to buy or is it a good time to sell? And for example, if we look at that moment in April, the market just goes up and down, up and down, up and down. And what is it now? Is it time to buy or is it time to sell? Without an indicator over the chart, it's really hard to say where the market is going. And even if I go to a lower time frame like M30, you will see the very same thing. Even if I switch down to M15, it's hard to say. There are moments when the market goes in one direction and it's easier to understand and to do some prediction, but when the market is just going up and down and we see the chart this way without looking the bigger picture on a daily chart, it's really hard to say where the market is going. Alright, so let me put now one indicator over the chart. I will click on insert, and this is where the Forex MetaTrader 4 indicators are, and they are available as well in the navigator. But if I click on insert and I go to indicators, you will see that they are grouped in different categories. We have the trend indicators, we have the oscillators, the volumes, the Bill Williams, and we have some custom indicators. Now the trend indicators are probably the most popular ones, and I will choose the moving average, which is one of the first indicators out there, and for me one of the best indicators. Okay, now we have by default period of 14, but I will select period 5 just to explain better what that is and to give you a better idea about how we use these indicators. So after I clicked OK, you see a line over the chart that goes below the price when the market is bullish, and it stays above the price when the market is negative. Okay, and if I scroll the chart, you will see that sometimes this moving average goes through the candlesticks. So how do we know when it's a good idea to buy or to sell? Now, when using Forex MetaTrader 4 indicators, there are a variety of strategies with each indicator. So with this moving average, I can give you a lot of trading strategies, but I will give you an example of one right now. For example, it is a decent strategy, and I'm using this strategy a lot with Bitcoin actually. Every time when the bar opens above the moving average, actually for the Bitcoin, sorry guys, for the Bitcoin I'm using it on daily chart, but right now I just want to give you an idea how I'm using the strategy. I will take a crosshair to make it more visual. So every time we have a bar that opens above the moving average, we have a buy signal. Okay, for example, this candlestick right here opened above the moving average, so this is a buy signal at that moment. I can put one horizontal line and I can put a vertical line. Here we go. At that moment we have the buy signal, and then when we have a bar that clearly opens below the moving average, for example, this one over here, we close the trade and we take the profit, okay? Right over here, you can see that this bar or this day, this candlestick opened below the moving average. So in this case, we would take a profit of over 200 pips. Actually, if I have to be precise, it is 205 pips. Okay, on a daily chart with euro dollar. But one more time, this strategy I'm using with the Bitcoin, I have explained it recently in one of my courses for the Bitcoin. It's called the simplest Bitcoin trading strategy because it's super simple indeed, but I use one more moving average to confirm the direction. And I'm not going into this strategy right now. I want to explain what are the Forex MetaTrader 4 indicators, and at the same time how useful they are, and at the same time what are the cons. Now, if I zoom the chart over here with this example, I picked it super randomly. One more time, that's not a strategy for euro dollar, it's for the Bitcoin. I'm showing it over the euro dollar just for demonstrational purposes. But I want to show you something. If we look back at the chart, have a look at this candlestick. I said that when the candlestick opens below the moving average, we should be closing the trade. Now I will ask you something. Did this bar open below or above the moving average? It's super hard to say, right? Because if I put the mouse on it, we can see the four values. We see that we have the open, the high, the low, and the close prices. So the open price is at 118.88, right over here, 118.88, but the moving average has the value of 118.90. Okay, a little bit higher, but pay attention to this. If I right click over the chart and I go to indicators list, I will go to the settings of the moving average, I will click on edit, and you will see that it applies to close, which means that this value of the moving average at this candlestick right here, we have a moving average one more time with the value of 118.90. This value for the moving average is at the closing of the candlestick, not at the opening. So we don't really know where the moving average was when the bar opened. We can assume that it was the value from the previous bar, because when the previous bar closed, there should be the opening, but because this is a daily candlestick, there is a difference between the closing and the opening of the next bar. So just to summarize it, probably the moving average was lower than the opening at this candlestick, but we cannot say this with certainty. We don't know this from the chart. We cannot understand that, okay? And a lot of traders and mentors build their strategies just by looking back on the chart, but that is wrong. What you need to know about the moving averages and about most of the Forex MetaTrader 4 indicators is that they are repeating. Okay, so what exactly happened at the opening of this bar, we don't know that. So if I go to the end of the chart by pressing this button on the top which says scroll the chart to the end of on ticking coming, you will see that the price is not moving simply because it is Saturday. I'm recording this video on Saturday. I usually take my time during the weekends to record as more videos as I possibly can when I'm not trading. And you will see that we have a current value for the moving average that sits at 118.32.3. But this value was different at the opening of the bar, and it's totally different at the closing of the bar. So during the day, during Friday, this value of the moving average was changing. And when Monday the market opens, we will have a fixed value on the moving average. Alright, so how the moving average is calculated? I wanted to bring out the first concern, which is the major concern when we are using moving averages and other Forex MetaTrader 4 indicators. But of course there is a solution to this problem which I will mention just in a second. So for you to understand me better, I want to tell you how the moving averages are calculated. So what actually the moving average does, it makes the chart smoother, right? I will just increase the moving average right now. I will make it thicker. I will pick the thickest option. I will click on OK, and here it is. Okay, so if you try to ignore the candlesticks and just look at the line, you will see that it makes the chart smoother, right? Right here the market goes down, after that it goes up. And you see, with our example, we have positive candlestick, negative, positive, negative, positive, 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 negative, positive, positive. We have kind of gravestone doji formation or something like that. And here the market just goes sideways. But you see that the 5 moving average clearly shows that direction is upwards, and the market continues until that moment. Then we have a drop, then the market continues higher. So simply said, the moving average makes the chart more understandable, smoother, and we have an idea of where the market is going. Is it going down? Is it going up? Is it staying just flat? Or it's just sideways, right? You can see that the moving average really shows the direction. So the first concern is that it is repeating, it changes its value on the current bar. And the first pro is that it makes the chart smoother, so we can clearly see the direction. Now, how the moving average is calculated? The simple moving average is calculated based on the closings of the candlesticks. And because I selected period of 5, it means that the last 5 days, the closing of the last 5 days, let me go back to the end. Okay, so the closing of the last 5 days are summed and divided by 5. So it is the closing of that day plus the closing of this 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 day divided by 5. Okay, it's that simple. So you see that the closing of this day, for example, is 118.71. Then we have the closing of 118.63 plus the closing of 118.35 plus 118.32 plus 117.59 divided by 5 should be 118.32. Okay, this is how the moving average is calculated. It's super simple, and that's why it's called a simple moving average. We have a few different moving averages. By the method they are calculated, so it could be a simple, it could be exponential, it could be smoothed, or it could be weighted, but I'm not going into details how they are calculated. If I switch to exponential, you will see no big difference. Look at the chart. Here it is. Very small difference, okay? So it depends what your strategy is and where are the entries, the exits. Some strategies work with the simple, some strategies work with the other methods. One more time, not a huge difference over the chart. Right, so the different Forex MetaTrader 4 indicators are calculated with different formulas. You don't need to go into details about the indicators, but the second concern that you need to know about the indicators is that the default parameters don't really work. So by default, as you saw with the moving average, was period of 14, but these default parameters were created from the brokers, and if you use the default parameters, probably you're about to lose money. Okay, I don't say certainly, but I say probably. Look at that, with the default 14, if you buy when the price goes above and you sell when the price goes below, you will be buying and selling a few times here, then here you will be selling, buying, selling, buying, selling, and then buying where? It's hard to say, right? Depends on the strategy one more time, but the default parameters doesn't really work. Now, the second pro, if I zoom out the chart, okay, the second pro that I want to give you is that if you combine different indicators, for example, I will add moving average of 50, and I will click on OK. We'll make it thicker again. Let's change the color to, what is it, green. I will click on OK. Here it is. When we have two moving averages, it's one of the first methods to build a strategy. We can use the cross. So when the slow moving average crosses the long one, it's a decent buy entry. And then when they cross, we can sell, but I would prefer to do the following. When they cross, I would buy, and when the fast or the 5 moving average turns downwards, I would sell. Okay, so for example, with this one, it would be an entry at about 118.58, and it would be an exit at 122.13, for example, right? But one more time, that's not a precise strategy. I'm just giving you an example how the Forex MetaTrader 4 indicators could be used, and there are a variety of strategies. So when we have 2 or more indicators over the chart, we eliminate the false entries and we build trading strategies. So in the next videos, I will talk more about the indicators, and I will share with you how we build professionally strategies so we know exactly where the good entries are. We'll see you right in the next video. Hello traders, it's Petko Alexandrov, and I continue now the course with a video where I will share with you more about the indicators, how to install them properly over the chart, and I will give you some tips when using indicators. So the MetaTrader indicators are available on 2 places on the platform. One is you can insert them from the top menu. Just on the first spot are the indicators, and we have a few that are probably the most common for the broker. And then we have the trend indicators, the oscillators, volumes, Bill Williams, and custom. With the different brokers, you can notice a small difference, but these are the common MetaTrader indicators. So how to install MetaTrader indicators? It's super easy. All you need to do is click over one. For example, I will select the Bollinger Bands, and here comes the menu. I will close it for a second and I will show you the second option. We have it in the navigator. You see under the accounts we have indicators, and here we have them grouped in the very same way. All you have to do is double click, or you can drag and drop over the chart, and still you will be installing the indicator. So with the different indicators, we have different inputs and period, deviations, depends what the MetaTrader indicator is all about, and depends if it is a part of your strategy. Now the Bollinger Bands is one of my favorite indicators, a very useful one, and it has 2 parameters, period and deviations. I will leave it by default and I will click on OK, and you will see how it looks like. Basically, we have those bands that are above and below, and we have this kind of moving average going up and down around the price. So if I click one more time on the indicator properties, and for example, if I decrease the period, let's say I will leave it to 5 and I will click on OK, you will see that it gets much closer to the price, right? The moving average is faster, and so the bands are getting closer to the price. Now let me change the deviations. Instead of 2, I will increase it to 5 and I will click on OK. So what you have noticed is that the moving average didn't change, but just the bands went further from the price. Okay, so it really depends on the properties and the parameters that you will be using for each indicator. The visualization over the chart will be different, and this depends, again I say, on the strategy that you will be using. If I increase the deviation to 0.5, for example, I'll click on OK, you will see how small the Bollinger Bands become, and it's really just going over the chart. So if I go back to 5, you will see that I can give you a variety of strategies that you can apply, But what is interesting about that indicator is that we don't use that much the moving average going through the price, but when the price touches the bands, for example, when the market is just going sideways like this period over here, if the price touches one of the upper bands, it could be a decent sell signal, and when it touches the other band, we can close the trade and take the profit. For example, we can sell over here and we can close the position over here, or we can sell as well in this point and close the position at that point. And what you can notice as well is that when the price is going sideways, the bands are getting closer to the price, and when we have an impulsive move, they open and get away from the price. So this is about the Bollinger Band, as I took as a random example for the purpose of this video, where I wanted to show you how to install the indicators over the chart. Let me remove it and I will add another indicator called MACD. So the MACD is again a super popular indicator, but what I want to show you is that when we install it on MetaTrader, it displays below the chart. So it's not over the chart like with the moving averages and the Bollinger Bands. It's below the chart in a separate box with a histogram. Okay, we have three things here. One is this red signal line that goes up and down. Then we have the MACD, which on MetaTrader is displayed by bars, and if you imagine connecting those bars, you will see that there is a line that crosses the signal line downwards, then it crosses the signal line upwards, and it gives signals that way. For example, right over here you see that the MACD or the bars get above the signal line and they give us a buy signal right over here, okay, at about 113. Then when the MACD gets below the signal line, in this case it is at 117.45, we can close the trade and take profit of over 400 pips in this case, right? Now if you want to make it more visual, you can always modify the indicators, so you can do it while you install them on MetaTrader, or you can later do that from the inputs. Where you have to go is to colors, and you can change the silver color, for example, to blue or aqua. You can make it a little bit thicker as well. The signal line, you can make it thicker so it will be more visual. And then if I click on OK, you will see the difference. It's much better. So how to install MetaTrader indicators so you see clearly where the cross is or where the signal is? Well, that is up to you. It's a personal choice how you will manage the colors over the chart. It's not only the indicators that you can change. If I right click and go to properties, I have the option to change the background. I can change the candlesticks. I can remove the grid from behind. Actually, I like to do that so the chart is clearer and I can put more indicators and I see them better. So do not hesitate to change the colors on the indicators to make them more visual when you install them, but be careful not placing too many indicators over the charts, because if you put too many, for example, if I put Bollinger Bands and I make them thicker, okay, and then if I insert, let's say, the alligator because it has a lot of lines and I want to show it to you, here it is. And then if I put, for example, the envelopes, and again I make it thicker and I change the color, for example, to red, and if I keep doing that, you will see so many lines and indicators over the chart. And if I click on colors and I change the thickness and I click on OK, you will see more lines over the chart. And if I keep doing that, I'll be basically hiding the price. And a lot of traders do the mistake to overload their charts with so many indicators that at the end of the day don't see the price. And from my trading experience, I can tell you that the price is what matters the most, okay? So when I'm building strategies for forex trading, I try to keep the rule for 2 entry indicators that confirm each other and 1 exit indicator, no more. Sometimes I go to 3 and maximum 4 entry indicators and maximum 2 exit indicators, but with the time I saw that 2 entry indicators or 2 indicators that confirm each other for me to open a trade and 1 indicator to use as a take profit or as a point where I'm closing the trade work best for me. Okay, so don't install too many indicators on MetaTrader because it will be harder for you to follow. You can read a lot about all the indicators out there. You will find so many strategies over the internet. So if you want to put them all in one chart, probably you will mess up. All right, so make it simple. Just a few indicators for a strategy works best, and don't make it too complicated. And in the next videos, I will talk more about building the strategy. In this video, I will share with you how to use signals on MetaTrader 4 because this is quite popular among the traders, especially the beginners. And there are 2 options. One is to use a paid service, so there are thousands probably different websites and companies that offer signals so you can receive them on the phone, via email, any social media channels. And the other option is to use your own strategies. I'm a bit skeptical because I have tested many paid services when I was a beginner. They didn't work. It's all about monthly payments. So what I prefer to do is to get my own signals or to use signals on MetaTrader, getting them from the chart, from the indicators, using my own strategies. So when you choose to use a paid service to get signals from, usually you will receive something like that, okay? You will receive buy euro dollar, for example. I'm giving a pure example here, right? Buy euro dollar at 117.60, take profit 117.90, and stop loss 117.45, for example, all right? And I will just make it red, a little bit bigger text, and I will actually need to paste it in the text, and I will click on OK, and here it is. Okay, this is just a random example. So what you need to do when you receive such a signal is you need to go to trading and then you open a new order. And now accordingly to where the current market is, at the moment is 117.59. So I'm recording this video during the weekend. This is the last price we have from Friday. The market is not open today. I'm just taking my free time to record videos as usual. So when you see the signal coming and then you see the current price, first things first, you need to decide what order you will be taking. Now, because the execution price or the price where you have to enter is higher than the current price, right? What you will need to do is to use buy stop order, okay? Because you will be buying at a higher price. I've already explained the type of order in the other video. So here you will enter the price at 117.60. And then as a stop loss, you will enter the value 117.45 and as take profit 117.90. And you will be placing the order. And below you have the option to choose expiry date and times. So for example, if it is a day trading system and they tell you that this trade is only for the day, if it happens within the day, then you have to check expiry and set the end of the trading day. Okay, and then you just place the order. I won't do it now because the market is closed. I won't be able to do it. But this is how you can place a signal, one more time, that you get from a paid service, any company. Now, personally, my experience showed that it's not working, okay? I don't say all of the signal providers won't give you profitable signals, but I can say that most of them won't, okay? They don't work. Like 99% probably don't work. And there are some guys trying to send decent signals using expert advisors, but this is something that we will be covering in the course, and I will show you how you can create your own expert advisors and how you can actually trade with signals coming from your own strategies, which for me personally is the better choice. Okay, so this is how to use signals on MetaTrader 4 if you are using a paid service. The second option is to use your own strategy so you can get your own signals. For example, I will add an indicator called CCI, or this is the Commodity Channel Index. Here it is. And I will use period of 5, and I will just make it a bit thicker, and I will click on OK. So here is the CCI with period of 5. As well, I will add the indicator called moving average, which you are already familiar with. Moving average, and I will leave 50 as a period, okay? And as well, I will add one more moving average, which will be with a period of 7, and I will just make it red because it's a fast one, and here it is. Now we have two indicators over the chart, so where is the signal? The signal comes when the CCI crosses the 0 line upwards, right over here, okay? So when you have a cross on the opening of the next bar, in this case the cross came here, so on the opening of this bar we have the confirmation that the cross was true, and we will buy. And you can see right here we have a very nice signal. So here is the cross on the opening of the next bar, we will be buying whenever CCI with period of 5 crosses the level line upwards. And as well, you can see that we have a signal here, we have a signal here, and we have a signal here. But if we buy here, we buy here, and we buy here, we will be losing, right? The market goes against us. This is why we have the confirmation from the two moving averages. So we are buying only when the fast moving average is higher than the slow moving average. In this case, we will be buying from this moment until that moment, okay? So all of these entries, this one and this one and this one, we won't take them because the slow moving average is above, or the fast is below the slow moving average, and we don't have the confirmation. So we would be buying only here, here, and right here, and right here, okay? But it depends when you catch the signal. So when you see the crossing, then you are getting your signal. So this is how you can get your own signals, and if I scroll the chart, you will see that we have some more decent signals. For example, right over here we have the confirmation the fast moving average is above the slow moving average. Here we have the confirmation to buy. Here we have another one right over here, right over here. But in this case here we don't have, because we don't have the confirmation. And this strategy applies with a stop loss and a take profit and an exit indicator, but I will explain it later in the course. Okay, so this is how you can use signals on MetaTrader, either from a paid service or either having your own strategy. And in this course I have decided to give you some ready-to-use strategies, so I will explain them. I will explain this strategy completely because it's a very nice one that I've been using, and at the same time I will give you the expert advisors, or the so-called robots, so you can trade the strategies automatically. This means that you won't need to stay in front of the computer to wait for the CCI, for example, to cross the moving average, because you will have to stay all day long, all night long. And I used to do that before I discovered the expert advisors and the robots. And nowadays I trade only fully automatically on the Forex market with different strategies, and I will share with you some of my best strategies with the robots included for you guys in the course for free. So stay with me and you will see how nicely it works. And here it is time now to go to the algorithmic trading, and I will start with the Forex market. So for the very beginners, what is the Forex market? This is the biggest market with over 5 billion daily transactions. And I usually don't want to explain with theory, but I prefer to share my trading screen and explain how the things work, and not to put in my courses PDFs with boring slideshow theory, so you will not remember anything from the course, because this is usually what happens when people take courses with a lot of theory. At the end of the day, they don't have any practical skills and knowledge. So if I have to explain it simply without theory, I will have to say that the Forex market is the biggest market out there, and it is the exchange of money. Usually the Forex market is associated with the currency pairs, euro dollar, pound dollar, euro pound, and many more. But everything that happens around us, the bank transactions, the hedge funds, even when we are trading crypto and stocks, usually we fund an account with dollars, for example, or in euro in Europe, and the platform or the broker might exchange that amount to another currency. So this way we are taking an action into the Forex market. Even we are funding an account on a crypto exchange or on a stock platform, we are still using one currency, exchanging it for another. Or when you are sending money to friends or relatives in a different country and you're exchanging one currency for another, this is the Forex market, okay? All of that money flow around the world, from banks down to us, the people and the traders, the customers that are purchasing stocks from online shops, and they are converting one currency for another. So all of that money flow is the Forex market, and all of these transactions actually affect the price of euro dollar, the price of pound dollar, euro pound, and all the other currency pairs. But of course, when we are sending money to someone or we are purchasing something from the internet, we are not affecting the euro dollar price. It is usually affected by huge transactions from the huge banks and institutions. The important news when central banks, for example, decide to increase the interest rate or decrease it. So all of these fundamental news usually affect the prices of the currency pairs, and we as traders, we take advantage of those movements and trade on the value of the price. Okay, and I am an algo trader. I prefer to trade automatically, but I will explain how the strategies that I'm using as expert advisors work manually as well, so you will understand what's behind the robot and how the strategy works. And at any moment, if you decide that you want to take a manual action to close the position or to execute a new one, you can do that. The robot will be there on the platform to execute the strategies to buy and sell on the Forex market or on the crypto, on the stock market, and you will see that it is very easy to close the positions if you decide manually. If you want to change something in the position, for example the stop loss and the take profit, I personally do not touch the open trades. Okay, if I depend on the robot to use it, then I leave it doing its work. And I think this is the right way, because this way I have a good statistics, I can constantly improve the strategies, and very importantly, when we use robots and algorithmic trading, we don't rely on emotions, feelings, what we heard from the news, what someone told us. We are using strategies that are proven, that show good backtest results, and that we see are currently making profits. Of course, there is never guarantee that the robots will continue profiting in the future, but it is much more to have a robot with a backtest, with a proven statistic, rather than a manual strategy that has no backtest at all. Okay, so this is the Forex market with very simple words. And in the next videos, I will explain how the strategies for the Forex market work, those that I have selected to show in this course, and the robots that I have shared already with you. So if you're ready, let's go to the first strategy. Now, before showing you the strategies for the Forex market, for the crypto, for the stock market, I want to make something very clear. Here are the strategies for the Forex market that I will explain just in the next lectures. And I have attached already the expert advisors, their trading. You will see all of that along the course. And you already have downloaded the robots. So each robot has parameters inside for the indicators. You can find that if I right click on expert advisors and I click on properties, you will see the parameters. For example, for the euro dollar strategy, we have the stop loss, we have the commodity channel index, we have the moving averages crossover, and we have the Bollinger Bands for that strategy. Now you will learn all of that in the course. What I want you to note, with the time the markets change, so I modify the expert advisors or the robots if it is needed. I constantly keep an eye on the performance, and if I have to change any parameter, I will do that. And I will upload at the beginning of the course the new parameters or the current parameters. So whenever you take the course and you download the robots, they will be always with the current parameters. And if I make a change after that, I will let you know. It is simple as that. Okay, so if you are taking this course a few months after I launched it or a few years after I launched it, you will see that the parameters in the robots are different from what you will see in the following lectures. Okay? But the strategies are the same. So if you see different parameters, don't panic. These are the current parameters in the robots. But in the next lectures, you will see the strategies. And if you want to apply these strategies manually, you will just need to take the parameters that you see inside of the robots. Alright, I hope this is clear enough. Go ahead with the course and you will see that the strategies are super simple to apply manually as well. But one more time, if you see different parameters from the video and the robots that you just downloaded in this course, this is because I have modified them for some reason. I'm using the Expert Advisor Studio software that we use in the Trading Academy to modify, to analyze the performance, to perform some optimization, robustness tests, and all of those complicated things that I'm not about to include in the course because I wanted to keep it simple. And if you just want to trade with the robots, all you need to do is download them from the first lectures and place them on the MetaTrader testing and trading. But if you want to learn how the strategies work, let's go for it. Alright guys, so in this video I will explain in details the euro-dollar strategy that I started, and I want to make clear that the strategy works on H1 chart, not on a daily chart. So to make it super simple and easier for everyone, I will start from scratch again. I will add the indicators again, so you will know how to do it step by step. So you can use this video as a reference whenever you feel you want to see the whole euro-dollar strategy again. Alright, so first things first, I will add the indicators on the chart. I'll be using a trend indicator moving average with period of 7. I will click on OK, here it is. I will add one more moving average with a period of 50 and I will change the color so it will be more visual, here it is. And as well, I will add the indicator CCI, which you can find in the oscillators, commodity channel index. Here it is, and I will stick to period of 5 and I will click on OK so it displays below the chart. And I will need here one horizontal line which will be sitting at the 0 line. Let me put it precisely. If you can't, you can just right click on the horizontal line properties, and in the parameters you can put 0 and click on OK and it will stick to the 0. Okay, so these are the indicators that we use for entry, and the signal comes whenever we have the CCI crossing the 0 line upwards. So we buy when the CCI cross the 0 line upwards. So here is a signal, there is another one here, over here, and right here, and you can see many other signals out there. And probably you will say, alright, but many of those will be bad entries because, for example, the last one over here, if we buy, the market goes against us. And you're right, but that's why we use the moving averages to confirm the direction. Okay, so we will be buying only when the fast moving average is above the slow moving average, and in this case the recent examples from Friday, because today is Saturday, taking my time to record videos, you will see that the market was going down, the fast moving average is below the slow, so we don't have the confirmation to buy. Now if I move the chart a little bit earlier, you will see how nicely it works when we have the fast moving average above the slow moving average. So in this period of time, from this point up until that point, we have the confirmation to buy, and the first signal comes right over here at about 118.42. Okay, this is when we have the confirmation on the opening of this bar. We have a clear cross, and on the opening of this bar at 118, what is the opening? I can put the mouse on the closing of the candlestick. You will see that the open price is 118.42. And the same thing applies on the other side. We would be selling only when the fast moving average is below the slow moving average. So in this example, from that point up until the Friday close, we have the confirmation to sell. So every time when the CCI period 5 crosses the 0 line downwards, we have this signal to sell. Now what is my exit? For this strategy, which I said is probably the best forex trading strategy for euro dollar that I'm using currently, I will insert one more indicator called the Bollinger Bands, and it is available actually in the trend indicators, Bollinger Bands. Here it is. And as period, I will be using 23. As deviation, I will be using 2.3, and I will click on OK. So the Bollinger Bands are displayed with 3 lines. One goes as a moving average in the middle, and we have one line above the price and we have one line below the price. So the exit rule here says that we will exit the trades whenever we have a bar opening above the upper band. And in this case, I just picked this example randomly, honestly, but in this case it worked really nice. You can see where the exit is, right on the top of the move. Okay, we have a bar that opened above the upper band of the Bollinger Bands, and we should be exiting. So with this example, we should be entering at 118.42 and we should be taking the profit at 119.05. Then you can see that with this short example right here, we have the sell. The first sell actually would be that one. And we have the entry at 118.65, so we are selling it at the moment. And the bar that opens below the lower band of the Bollinger Bands is this one over here, 117.83. Not a bad trade, okay? This is the first bar that opens below the lower band. As well, this strategy uses stop loss and a take profit, stop loss of 50 and take profit of 70 pips, but it's a personal choice if you want to use them. I personally use them Okay, so for example, if our entry is at 118.42, stop loss 50 would be 117.92, right? 117.92, somewhere over here. Okay, and our take profit would be 70 pips higher. So we said that the opening of this bar is 118.42 plus 70 pips, that would be 119.12. okay, 119.12, and here it is. Okay, so almost the take profit was reached, but in this case the exit condition of the strategy applies. Alright, so this is how you can apply the strategy manually. If you wish, later in the course I will show you how to apply the strategy with the expert advisor or with the robot, so you won't need to stay in front of the screen. And this is what I like. Okay, honestly, I don't like staying in front of the screens because I have spent years looking for good strategies, looking for the best entries, but when I found out that it is possible with algorithmic trading, obviously I prefer to do it that way. Okay, so thank you guys for watching the video. If you have questions, let me know. I'll be super happy to answer. Take care. Hello everyone, it's Petko Alexandrov, and in today's video I will share with you the pound dollar trading strategy. It works again on hourly chart, and I have selected to share with you strategies for euro dollar, for pound dollar, and for euro pound. So this way we have equal exposure between euro, pound and dollar, and this is the right way to go. So on the chart I have already placed two indicators, but of course I will explain them from scratch. So the first indicator that we have is the accelerator oscillator. You can find it on the top of the indicators, and what's interesting with this indicator, we don't have any parameters. All we have are these green and red bars, and we have the zero line. So you can see those bars crossing the zero line, and this is where the first entry signal comes. So every time the accelerator oscillator crosses the zero line upwards, we have the signal to buy. Every time it crosses the line downwards, we have the signal to sell. Then we have the signal to buy, then we have to sell, and so on. Many examples over the chart, right? And this is why we have the second indicator, CCI, which confirms and filters the entries. So you will see that we will not take all of these entries buy, sell, but we will take few of those by filtering them with the CCI indicator. The CCI indicator you can find in the oscillators, and with this strategy we use levels of 120 and negative 120 parameters, period of 50. Okay, here it is over the chart. So whenever the CCI crosses the 120 positive level, we have the confirmation to buy, and whenever we have the CCI crossing the negative 120, we have the confirmation to sell. So if you pay attention to the chart, you will see that right over here the accelerator oscillator is already above the zero line, and we have the CCI cross, so they don't confirm each other. Right over here the accelerator oscillator is already below the zero line, so again we don't have the confirmation. At that moment over here we have the cross confirmed on that bar, but already CCI is crossing downwards, so again we don't have the confirmation, and simply right over here we don't have any entry signal. Let me go back a little bit and look for clear entry. I think we have one over here. So if I start from a little bit earlier, you will see that they don't confirm. So to make it clear one more time, we need to see the accelerator oscillator crossing downwards the zero line, and at the same time we need to see the CCI crossing the level of negative 120, okay, at the very same bar, so we will have confirmation. Now over here you can see that we have the cross at this bar, and it will be confirmed on the next one. So again, it's not a confirmation, but right here we have the entry. Okay, Let me put a line so it will be clear for you. Okay, on this bar you can see that the accelerator oscillator is already below the zero line, which means that it crossed the zero line, and we have the CCI crossing the negative 120. But as you know, the indicators are repeating, so we wait one bar for the confirmation. And on the opening of the next bar, we have the entry, which is approximately at 138.02. Okay, so at the opening of this bar, we have already one negative accelerator oscillator bar below the zero line, and we have the cross from the CCI confirmed. At that moment, we have the confirmation to sell. Now, this strategy comes with a stop loss and take profit. The stop loss is 60, so it will be 138.62. I'm putting them a little bit random over the chart. I don't want to go into details to make the video any longer. So right over here will be the stop loss. Let's make it red because it is a stop loss. And we have a take profit down with another 90 pips. So let's see with this example that I took randomly if we are about to see the take profit hit. Yep, we will have it at 137.12, right? Take profit of 90 pips, so it will be 37.12, somewhere over here. Okay, 12. Here we go. Let me just zoom a little bit so I can put it more precisely. 12. And actually, the stop loss is 60 pips and I've placed it on 160 pips. Okay, it should be 138.62, 62, somewhere at this moment. Let me zoom the chart. I want to show you exactly where the entry is. So I will make it just a little bit bigger. Here we go. 62 is the stop loss. Okay, 60 pips distance for the stop loss. Take profit 90 pips, and you can see that the take profit was hit with this example. Now with this strategy we have as well an exit condition, and it comes from the stochastic indicator. Okay, it is in the oscillators again, stochastic oscillator. With the K period we have 15, with the D period we have 1, and we have slowing 5, level of 20 and 80, okay, as it comes by default. But the parameters 15 for the K period and 1 for the D period, slowing of 5. I will click on OK. So it's another box below the chart. And the exit condition here is that we should exit the trade if the stochastic indicator changes its direction upwards. So with this example that I picked, you can see that the stochastic goes downwards. And when it changes its direction upwards, we are good to take the profit. Okay, let me decrease a little bit the terminal so we can see better what's going on in here. And the chart moved, so here it is. Here is the example. Okay, here is the entry, stop loss, take profit. Okay. So at that moment, you can see that the stochastic is going down, and let's see when it changed its direction. If I put the mouse, you can see the value decreasing and decreasing, 183.90, 129.59, 129.59. So here it is just flat, and then I guess on the next bar it will change, 137. On that bar over here, we have the confirmation or the exit to close the position and take the profit. Okay, so you have two options. You can use the stochastic or you can leave it to the take profit. Now I am a fan of taking quick profits, so usually I take the profit with the condition that is first on the market. Okay, if the stochastic changes its direction upwards, I'm taking profit. If the take profit is hit, then it's hit. Okay, I don't do anything and I don't close the trade manually. So these are the three indicators that this strategy comes with. Accelerator oscillator for an entry, and we need the confirmation from the CCI, and then For an exit, we have stop loss of 60 and take profit of 90 pips, and we have the stochastic changing its direction upwards. For a long trade, it's the very opposite thing. We need to see the accelerator oscillator crossing upwards, the zero line, and at the same time, you need to see the CCI crossing the 120. The take profit is by using the take profit, or when the stochastic is changing its direction downwards. Okay, just the very opposite thing from the example that I showed to you guys. So this is how the strategy works. Really nice, because the CCI really filters all the signals from the accelerator oscillator, and it picks really nice trades, and hopefully it will remain profitable in the future. So all you can do is just to test it, practice on a demo account, and see if this is the right strategy for you, or you can test the robots a little bit later in the course when I show it to you. We'll see you in the next video with the Euro-Pound strategy. Hello traders, it's Petko Alexandrov, and in this video I will show you the Euro-Pound strategy on hourly chart. Much easier strategy compared to the other two, because it uses just one entry indicator and one exit indicator. Of course, stop loss and take profit are there to protect the capital and to secure the profit when the market goes in our favor. Alright, so the entry indicator that I will add over the chart is called the D marker, which you can find in the oscillators. Here it is. And instead of the default period of 14, we will be using period of 40, and levels we will be using the default ones. I will click on OK, and here it is over the chart. Again, you can make it thicker to see better. I usually prefer to do it that way for the levels and for the indicator itself. Okay, so this indicator we'll be using for the entry signals, and for the exit or when to close the position, we will be using actually the alligator, which is a very colorful indicator. You will see it in a minute, but again, we won't be using the default parameters. It will be 38 for the jaws, shift of 28, then teeth period we will have 28 and shift of 12, lips period of 12 and shift of 2. Here we go. I click on OK, and you will see it over the chart, 3 lines, and I will explain the strategy. The entry signal comes from the D marker, as I said, and here we have the buy signal whenever the D marker crosses the 0.30 level upwards, and when the D marker crosses the 0.70 level downwards, we are selling. Okay, so with that example right over here, with that cross, actually with this example it's a little bit hard to see if there was a real cross. I will put a horizontal line over here just to know where the sell signal is. So right over here, if the D marker crossed the 0.7 level upwards and then went downwards, we are having the sell signal. And in this example here, when the D marker crosses the 0.3 level upwards, we have the buy signal. And usually the cross is confirmed on the opening of the next bar. So it's right over here, okay? Here is the buy signal, here is the sell signal. Now if I stay with these two examples, I want to make it clearer where are the entries and the exits. So let me leave now the sell trade, this one over here. We said that there is a sell signal over here because the D marker touched the 0.70 level. The exit point comes from the alligator, and with these strategies it is with the teeth, which is the red line. Okay, the green is the lips, the blue one is the jaw, and the red one is the teeth. So again, the alligator has a lot of conditions, different strategies, different ways to use those 3 lines, and it's quite interesting indicator that I use quite often. But with this strategy, all we need is the teeth. We take the profit or we close the position whenever the teeth change its direction, and in this case it is a sell order. So we will be closing the trade with the teeth when they change their direction upwards. And you see that if we are using only the exit condition or the teeth, they are still going downwards. So at the opening they were going upwards, then they changed downwards. So to close the trade we need to see the teeth changing their direction upwards. And with this example the teeth didn't play a role because we have a stop loss and a take profit. And the take profit is 20 pips below. So if the entry is at 185.41, the take profit will be at 185.21. Here it is. And then the stop loss is 95 pips higher. And I know that many of you will say, what? 95 pips stop loss with a take profit of 20 pips? That is a bad risk reward ratio. I agree with you. But give me a second and I will explain it to you. Okay, 95 pips higher would sit at 86.36, something like that. If I'm wrong, I apologize. I don't want to make exact calculations right now because I don't want to make the video too long. But stop loss 95 pips, take profit 20 pips. When we have an entry, and let's say this is a super random entry on the market, no indicators, nothing, you just sold at one moment, right? The closer the take profit is, the higher the chance there is that the take profit will hit first compared to the stop loss, okay? So the closer you put a level, it gets more likely that it will hit first compared to a level that is far away. Okay, this is super simple logic, and I know that many experienced traders are used to have always 1:2 or 1:3 risk reward ratio. Okay, I agree, but not with every strategy. Okay, and later in the course I will show you how to backtest the strategy as well on MetaTrader. So you will see that with the expert advisor, with the robot, and with the backtester on MetaTrader, you will see the very same results. That this strategy is profitable exactly because the take profit is closer or is smaller than the stop loss. And in this case, you can see that what happened, the price went a little bit on a negative, then on a positive, and right over here, or probably here, depends on the spread at this moment, the take profit was hit and we take clear 20 pips. Simple as that, guys. Whenever the D marker crosses upwards, we have the buy signal. I bet you without putting any calculations and levels that if we buy over here, again the take profit will be hit. So it's a really nice, decent strategy. And yes, the stop loss will be hit from time to time, but more often the take profit will be hit because this is what the strategy showed me so far. This is what the backtest shows. And this is all that matters for me. Alright, and there is never guaranteed that the strategy will continue performing profitably in the future. But what I usually do is to first perform a backtest, and second is to test the strategy on a demo account. So I see with my eyes, not depending on anyone else, I want to see with my eyes the profits into the account before I risk real money. This is how I personally do it, and with the time I figured it out that this is the right way to go. So I always suggest everyone watching to do it in this way, so you won't risk real money immediately whenever you have the strategy or the robot. Make sure always to test it. Alright guys, so these are the 3 strategies. In the next videos I will show you how to trade them automatically, and you will see that it is the better thing because you don't need to stay in front of the computer, and I just love it. So I can spend time with my family, which got bigger now with the twins. So I really prefer spending time with them rather than watching the charts and waiting for the trade. Alright, so let's go for the algorithmic trading. And of course, if you have any questions about that strategy, you let me know. Cheers! Alright traders, so in this video I will show you how to place the trading robots on the MetaTrader 4 platform. It is super easy. Once you do it, you will feel comfortable and you will know exactly what you are doing. I will explain more about the algo trading, and I will share with you why I prefer algo trading than executing the strategies manually. Alright, so in front of me I have three strategies for euro dollar, pound dollar and euro pound. I have already explained how these strategies work in the previous videos, and as you would probably already know, it is not easy to follow many indicators over the chart. And especially if you are following 2, 3 or even more strategies, it becomes nearly impossible. You will need more monitors. I have reached up to 6, 7, 8 monitors. You can see them in some of my old videos. But with the time, when I figured out that algo trading in MetaTrader 4 is very reliable, very easy to do, I stopped watching at the charts. I just don't look at them. I don't look at the indicators. And for algo trading on MetaTrader 4, you don't need to have the indicators over the chart. If you have the ready-to-use robots as expert advisors, you don't need to have the indicators over the chart. The indicators, the trading logic behind the strategy is coded in the expert advisor. So when you are looking for the cross, or if you are waiting for a bar to open below the lower bands in order to close the trade, when this condition happens, the expert advisor will execute immediately the position. It will either open or close it, depends on what the strategy is, but it will do it immediately, okay? You don't need to be in front of the screen to wait for this to happen, because it might happen during the night when you are sleeping. You cannot stay in front of the screen 24 hours. Believe me, I have tried to do, and I quickly figured it out that I will miss a lot of trades. First, I accepted it. I said, okay, I will be trading just the London session, so whatever I catch with the strategies I was using at this time, that is fine. It was working, but I always wanted to trade all day long. So with the time, I found out the expert advisors, the algo trading MetaTrader 4, and I saw that it works nice, because from Monday, when the Tokyo Stock Exchange opens, up until Friday, when the New York Stock Exchange closes, I can trade fully automatically different strategies. And in some of my courses, I show that I trade with up to 99 different strategies on one MetaTrader 4, which is absolutely possible. Okay, so how to install a Forex robot in MetaTrader 4? I will install now the 3 Forex robots for the strategies, and you will see that it's nothing really hard. So here are the ready to use robots. I have the MQL4 source files because I'm going to do algo trading in MetaTrader 4, but if you are about to use MetaTrader 5, you will need the MQ5 files. So just mark the 3 that are with the MQL4 source file type, and I will copy those. And then what I will do is I will go to File on MetaTrader 4. I will go to Open Data folder, and I will select MQL4, Experts, and I will paste them here. There are some experts or Forex robots that come by default when you install the trading platform, so I'll just leave them. I will close the folder, and here comes the magic with the refresh trick. I will right click over expert advisors in my navigator tab, and I will click on refresh. This will compile the expert advisors, and they will be ready to use right over here under expert advisors. Now, if you're about to do algo trading in MetaTrader 5, what you will need to do is to go to the code of the expert advisor, and you will need to click on compile, so the expert advisor will be in a ready EX5 and it will be ready to use for algo trading. Now, something very important when you install a Forex robot in MetaTrader 4 is that you need to enable the auto trading first before you place the robots over the charts. Alright, so now I will switch to euro dollar on hourly chart, and I will double click on the euro dollar strategy or the euro dollar Forex robot, And here comes the small menu where you can change a few things. Here are the inputs where we see the conditions, the entry lot. So let me switch, for example, to 0.1 lot, and I'll be trading with this amount for the purpose of the video and the course. And then we have the stop loss, the take profit, and the indicator values. I won't be changing anything. I will just click on OK, and you will see the smiley face in the right hand upper corner. This smiley face shows me that the expert advisor is attached on the chart and it will start trading. And actually I'm recording late on Sunday evening, so the market should be open shortly. Once the market is open, the expert advisor will start scanning the market, and on the opening of every bar on the hourly chart, it will check for the entry conditions. If these entry conditions are met, if the indicators confirm each other, we will have the entry automatically and we will see the trade in the terminal. Okay, same thing with the pound dollar strategy. I will double click. I will just change to 0.1. It is on 0.1, and I will click on OK, and I have the smiley face. The third one is euro pound. So instead of double click, you can drag and drop the Forex robot over the MetaTrader 4 chart, and again I will make sure I'm trading with 0.1 lot, and I will click on OK. Alright guys, so this is how easy it is to install a Forex robot in MetaTrader 4. Nothing really complicated. All you need to do is to drop it to the expert advisors folder, which one more time you can find in File, Open Data folder, and then click on MQL4 Experts, and here it is. So now after compiling the expert advisors, you can see that I have those EX4 files, or these are the ready to use robots. After I drop them in here, I have clicked the refresh button on the expert advisors, and it appears after I hit the right button on my mouse. And for MetaTrader 5, one more time, you need to open the meta editor and compile from there. And actually the market is already open, guys, because it's after midnight. Okay, so it's already Monday morning. You can see the quotes are moving, and now on the opening of the next hourly chart, the expert advisors or the Forex robots will check for the entry conditions. If they are met, the trades will open. They will automatically place the stop loss and the take profit for each trade, so I don't really need to do anything from here. Alright, so I will leave those expert advisors running for some time, and we will see what results we will have and where the trades will open, if they will match our trading conditions with the strategies that I already explained. Okay guys, we'll see you in the next videos. Cheers! Dear traders, while I'm waiting for the first results and the first trades from the robots, I will record the video where I will demonstrate the strategy tester that is available on MetaTrader. I will share with you some of the pros and the cons that we have, so that you will be able to backtest the strategy even without EA Studio or any other professional software. You can test these robots on your broker after you install the MetaTrader platform. So let me pick, for example, the robot for euro pound, which is already attached to the chart. And what I will do, I will right click, I will go to expert advisors, and I will hit on strategy tester. You can do that by pressing the F6 on your keyboard. You will see a new box that opens on the bottom of the trading platform, and usually you will see it all fulfilled automatically. It will be the robot that you have on the open chart, and it will be the symbol that is on that chart. Alright, and below we have model. Here we have three options. One is every tick, which says that it's the most precise method based on all available latest time frames to generate each tick. Now in MetaTrader by default there is no tick data as an information, so if you are about to use that method, you need to have tick data from elsewhere so you can use it. The control points is a method that comes from the nearest less time frame, and it says that the results must not be considered. The third one is open prices only, and it says that this is the fastest method to analyze the bar just completed only for EAs that explicitly control bar opening, or in other words, for expert advisors or robots or strategies that work on the opening of the bar, just like those three strategies. Alright, so the first important thing that I want you to take from this MetaTrader 4 strategy tester tutorial is that you need to know how the robot works, so you will be able to backtest it properly. And with these robots that I included in the course, I can tell you 100% that they work on the opening of the bar. And you should be using only the open prices method. Alright, on the right side we have the period, which is H1. We have the spread in points, so we'll leave it to 10. And then we have the expert properties. Now here are the parameters. But you have as well the option to optimize the strategy, and with very simple words you will be looking for better parameters. For stop loss, take profit, you can decide with what step. For example, if you choose step of 5, it means that it will check with a stop loss of 85, 80, 75, 70, 65 and so on. But there is a huge risk when you are optimizing a strategy, because you can over optimize it. In other words, you will find the perfect backtest, which is for the tested period. If you have the data, for example, for the last 1 year on your chart, the optimizer in the strategy tester in MetaTrader 4 will find the best values for the strategies, so you can see a better equity line. But in the long term, when you start using the strategy, it is more likely that it will start losing, because it is on unknown data. Okay, so I strongly recommend that you do not use the optimizer unless you have the experience. In some of my courses I have talked a lot about that. There are different methods to avoid over optimization, so I'm not going into those details right now. I will just click on cancel. Okay, there are the symbol properties, which are pretty much the symbol settings that you have for the asset. And then if I just click on start, you will see how fast it works, because the code of these expert advisors is just perfect, no any mistakes. It's not taking ages to perform the backtest. And if I go to results, you will see all the trades that opened and closed. So you have the order, the size, at what price, what was the stop loss and the take profit, what was the result, profit or a loss, and how the balance goes starting from $10,000. If I scroll lower, you will see that it increased to nearly 10,200, but the last trade was a losing one. Okay, so if I go to the graph, you will see a stable graph, but we have one losing trade at the end. And as we said, with every strategy there will be losing trades, which you need to accept and embrace. Okay, so don't expect to see equity lines that have no losses. If you see such a backtest from an expert advisor, it means two things. One, someone is selling to you this expert advisor and they want to take your money with a fake backtest. Or two, the strategy was over optimized, either using the MetaTrader 4 strategy tester or some professional software, and they have over optimized the strategy so the backtest looks perfect for the backtested period of time. Now when I said period of time, probably you have noticed that the starting point of the backtest started on the 20th of April 2021 and finished on the 30th of July. So it's not a lot of time, a few months, and you can see that just, 14 trades, 15 trades were open and closed. This is because Black Bull markets doesn't really offer a lot of historical data. If I press the home button on my keyboard and I take the crosshair, you will see that I can go back just to April. And for backtesting a strategy on hourly chart, that's not enough. Alright, so some brokers offer more historical data, others not. If your broker doesn't offer a lot of historical data, what you need to do is just to leave the MetaTrader open, and with the time it will collect the bars. Okay, all the new bars that are coming, they will be stored and collected and added to the historical data. So when you are using the MetaTrader 4 strategy tester, you will be having more data. Alright guys, so if you have any questions, let me know. As an assignment, in the next lecture, I would want you to perform a backtest with the 3 robots on your broker. Let me know what are the results, and I will give you some tips in the assignment so you can do an accurate backtest and learn how to use the strategy tester in MetaTrader, because it is vital when you are using expert advisors or trading robots. Okay, let's go for it. Hello everyone, it's Petko Alexandrov. Hope you are doing well, and in this video I will show you what are the results with the 3 robots that I have placed for algo trading on my VPS. So what you can see here is the MetaTrader platform with the euro dollar, pound dollar, and the euro pound strategies and expert advisors trading. Currently I have 3 open trades. One is negative 25, another one is with negative 80, the third one is positive 63, but I usually don't look at the open trades because today they might be on a profit, tomorrow they might be on a loss. The market goes up and down. So what I usually look at is the account history. This is where we have all the trades, all the opened and closed positions, and you can see that totally until the moment I have profit of $99.17. So in the account history we can see the open trades, when they opened, when they closed, what time. Then we have the stop loss and the take profit columns, which are very useful because you can see actually when the stop loss was hit, you can see it in red, and when the take profit was hit, you can see it in green. And when you have no any color, it means that the strategy closed the position because of the exit condition, okay, or because of the exit indicator. As you already saw, these strategies have entry indicators and they have exit indicators. Usually when the market is more volatile, the price moves fast, the indicators are lagging. So imagine this is the price, it moves fast and the indicators are lagging behind. It will hit first the stop loss or the take profit. And exit indicators usually take place when the market is calm, it goes up and down, and it stays within the range of the stop loss and the take profit. So stop loss and take profit something like borders, right? And you have it on the position. So if something happens, something extraordinary, news, unexpected move, the stop loss and the take profit are there. Stop loss is there to protect your capital so you don't handle huge losses. Take profit is there so it secures some profit. And when I say secure the profit, quite often you will see the price going very close to your take profit. Take profit is here, price goes very close and it goes down again, right? It happens. But when we have a huge move and then price goes back down, then the take profit secures this profit and put it into your account. So many people prefer to use strategies that have no stop loss and take profit. I personally like to have them in my account because with my experience testing hundreds and thousands and probably, I don't want to say millions, but for sure I have tested over 100,000 strategies. When I look back into my records, I saw that stop loss and take profit just works better, okay? Having them into the strategies works better. Now the other interesting thing to see is the swap column, okay? So these were the charges from the broker when the position went overnight. For example, here we didn't have a swap because the trade was opened on the 14th of September at 11 o'clock and it was closed on the 14th of September at 4 p.m. So basically it closed within the same day. We didn't have to pay swap to the broker. So we see 0 in the swap column, and you will see that there are a few more times when the trade was open and closed within the same day. And this is with the euro-dollar strategy, which says that euro-dollar strategy is more active compared to the others. Alright, the other thing is that this profit for every trade is because I have set 0.1 lot, and totally I have $99 as a profit, but this is because I selected to use 0.1 of a lot. Now if I was trading with 1 lot, it means that I would have $999, and if I selected to use 10 lots, then I would have had $9,917. Okay, so it's all about with how much you are trading, but I'd really suggest you, if you want to test those expert advisors, just put them on a demo account with a small amount. 0.1 is alright, because when you're testing them, it really doesn't matter with how much you are trading. But do not jump straight away with the live account. That's my suggestion, because it's risky. I already explained the difference between the demo and live account, and if you decide to use those robots on your live account, that's a personal choice. This is your risk you are taking, so be careful about it. I will include the robots as a resource file to this course, but I want you to be careful with them, and one more time, it is your own responsibility when you are trading with the robot. So these are the results that I got with these 3 strategies, and I thank you for watching. We'll see you in the next video. Hello everyone, it's Petko Alexandrov. I hope you are enjoying the course so far, and in this section I'll be talking about cryptocurrency algorithmic trading, which I've been doing for the last 4 years. I believe I started in 2017 when the Bitcoin was below $1,000, but actually when we do algorithmic trading, it really doesn't matter where the price is. At the current moment it's about the $60,000. I have been trading it when it was $1,000 with the very same strategies and expert advisors that I will share with you. Of course, I have developed those and I have improved them since 2017, so they will be suitable for the current market conditions. And as well, in this section, just like with the Forex strategies, I will explain how the robots work manually, or what is the strategies behind the robots, so you will have an idea what actually those expert advisors will do and when they will be opening the trades. So to make it super clear, CFD trading stands for contract for difference, which means that we will be trading on the value of the asset, no matter if you're doing it manually or automatically. When you open a trade, let's say you buy Bitcoin at $60,000 and you close the position at $61,000, you will be profiting this $1,000. At the same time, you can sell Bitcoin without owning it previously, and if you close the position at $59,000, again you will profit this $1,000. Now if the price goes against you, obviously you will be handling losses. So I'll try to make it even simpler for you. If you open an account with a broker, let's say with $10,000, you can use those money to buy or sell Bitcoin or any other crypto they offer without owning it previously. You won't need to go to exchange and buy actual cryptocurrency coins from there. You will be just trading on the value of the asset. And this is super important to understand for CFD cryptocurrency trading, because if you open one trade with one broker, you cannot close it with a different broker, all right? For example, if you purchase Bitcoin on Binance, you can send it to any other exchange like Huobi, Crypto.com, Kraken, or any exchange you are using, and you can sell that cryptocurrency in there, right? But when it comes to CFD trading, when you open the trade or when you buy Bitcoin at one broker, you should be closing this trade within the very same trading platform with the same broker. Now for the purpose of this video, I'll be using Easy Markets, which is a broker that I've been using for CFD cryptocurrency trading. So I will go to platforms and I will click on MetaTrader 4. Then I will register and download MT4. I will need to drop my email address right over here, and I will create a password that I will remember. Okay, and I will click on sign up. So yep, I'm from Bulgaria. I will click on continue, and I will download the platform on PC. Okay, it's available on iOS or Android. Now keep in mind that you cannot trade with expert advisors on a web version or on the mobile app, at least for the moment. Okay, so I have downloaded the platform for PC, and there are a few easy steps you need to follow. Now you can click on settings and select where you want to install the platform, but now I will cancel the installation because I will be putting this platform on my virtual private server. So even my computer is switched off, I can still do algorithmic trading with the robots, because they are on a VPS virtually, and this is very important when you're trading with expert advisors. So let me minimize the platform that I have for the Forex robots, and I will just paste over here the installation folder for easy markets, and I will just double click on it. This is in my VPS. Here it is. I will click on next, and pretty much that's it. It's super easy actually to install MetaTrader platform, and it will be ready in a second. I will just click on finish, and it will open right on my VPS. And while it's opening, keep in mind that you can install many MetaTrader platforms with many demo accounts on many brokers absolutely for free, so you can practice and get access to the market, which is super cool if you are a beginner. So now I will open a demo account. I will click on next. I will select a new demo account. Again, I will click on next. I will need to write down my name together with my email, and then I will select my phone number, and please allow me to hide the phone number. And let's say I want to open an account with $50,000 with leverage 1 to 50. I will agree to subscribe to their newsletters in case they send me something interesting. I will click on next, and here it is, the login with the password. And just make sure you always copy your login password and investor password, and click on finish, and I should be connected in a moment to the broker server. So just make it fit to my recording screen, and here it is. Okay, I have opened a demo account, virtual account, and you can see on the left side that I have the quotes. Now, if you want to do CFD cryptocurrency trading, you need to look for the cryptocurrencies, and usually when you install the platform for the first time, you will see just the Forex pairs. What you need to do is right click and hit on show all. Here it is, and it will load all the assets that the broker offers. So if you don't see Bitcoin or any other cryptos, simply it means that the broker does not offer them on MetaTrader. The Bitcoin at the current moment sits at 60,200 and something. I will right click and go to spread to see how much is the spread. At the current moment, where the Bitcoin is actually going above the $60,000 for a second time in the history, the spreads are quite high. And I quite often get the question what to do when the spread for the Bitcoin is huge. When it comes to algorithmic trading, I usually just pause the trading if the spread is above $50. Now, for the current moment with this broker, the spread is fixed to $50, which is good enough for me, okay? But if I cannot find a broker with spread less than $50, I just pause it and wait for the market to calm down a little bit, all right? So right now I can right click over Bitcoin and I can hit on chart window, and a new Bitcoin chart will open. I will maximize it. I will just close the Forex pairs because I don't need them at the moment. and I'm good to go. I can trade now the Bitcoin on whatever time frame I want. So you can see just above the $60,000, I can switch to candlesticks, and I can trade the Bitcoin or the other cryptos offered by the broker manually or automatically. And the easiest way to go is if I right click over the chart and I hit on the one-click trading, I will see the box where I can sell and I can buy. So this is the CFD cryptocurrency trading. Even I don't have actual coins, I can fund an account. In this case, I demonstrated with a virtual account because this is what I would suggest you to do if you're a beginner. But I can sell the Bitcoin or I can buy it just using the funds that I have in the account. No need to buy actual coins from the exchanges, okay? And I'll be trading on the value of the asset. If I buy and the price goes up, I'll be making profits. If I sell and the price goes down, I'll be making profits as well. Obviously, if I hit the wrong direction, I'll be losing money from my balance. And be careful when you're using leverage for CFD trading because it gets riskier when you open huge positions. But no matter if you're using leverage or not, if you are trading a small portion of your capital, you're not risking a lot. But if you open trades with all of your money, it is very likely that you will blow your account. So take it easy, start with the demo account, see how it's going, and if you are happy with the results, you can actually switch to live trading, but this is a personal choice and you should be always careful with that. So in the next videos, I will share with you 3 strategies that you can use for Bitcoin that I've been using. You will see how they work manually, and then I'll put them for automated trading so you can do that as well if you want to. We'll see you right in the next video. Hello everyone, it's Petko Alexandrov, and in this video I will show you the first strategy for the Bitcoin so you will know how the robot for this strategy works, or if you want to test it manually, or if you're just curious on what rules the robot opens and closes the trades. I will try to explain the strategy in details in that video. So the first strategy actually is one of my favorite because I like the first indicator, and actually it's not an indicator that is available on MetaTrader platform, but I will explain it in detail so you can understand me better. Now, we are buying with that strategy whenever we have 4 consecutive candlesticks in the same direction. So let me zoom it, and I will just take some of the recent candlesticks because I see here such a formation. Alright, so what you can see is that right here we have 1, 2, 3, 4 positive candlesticks, okay? And on the 5th one, on the opening of the 5th one, we buy. Let me try to put it a little bit better. So here it is, okay, right here. Price is about 59,581, or if I put the mouse on the closing, we can see exactly where is the open, 59,576. Okay, 576. So this is the opening of the price. Let me put it 59,576. And of course, if you are trading manually the strategy, you are not about to open it exactly on the opening because most probably you will miss it. Okay, even you see the price forming 4 consecutive hours on a profit, and then you get just ready on the one-click trading button, is very likely that you will be late with a few seconds. And especially if you're not in front of the screen, you might miss the entry. And this is why I prefer algorithmic trading, okay? Because I don't need to stare with the chart all day long. And of course, if this formation happens during the night, I will miss the entry, okay? It's because I will be sleeping. But if I'm trading the expert advisor, it will not miss it. Okay, so one more time, the entry is right over here. This is just an example entry that we had on the recent bars by the time I'm recording this video. So one more time, we buy after 4 consecutive positive bars, and of course we would sell after 4 consecutive negative bars. I see it right over here. 1, 2, 3, 4 negative consecutive bars, and as well we have right here 1, 2, 3, 4. On the opening of the next one we should be selling. But now let's stick to this example where I place the lines 1, 2, 3, 4 positive consecutive bars or candlesticks, and on the opening of the next one we actually buy. Now the idea of that strategy is that whenever we have 4 consecutive hourly bars, this gives the signal that the market is positive, okay? Something happened, either huge guys are buying at some fundamental news for the Bitcoin, doesn't really matter, but 4 consecutive hours is a very positive sign, and at the same time 4 negative candlesticks could be a negative sign, okay? So here is the entry, and where is the exit? For the exit, I use the RVI indicator, and I will go down to the oscillators, okay? Relative Vigor Index. As a period, I won't be using 10, but I will use 16. And I will click on OK. Before that, actually, I can make it again a little bit thicker so it will be more visual. Click on OK, and here it is below the chart. So the RVI indicator is displayed below the chart with 2 lines, green and a red one. The green one is the actual RVI, and the red one is the signal line. So the exit condition for that strategy is when we buy, we should be closing the trade whenever the RVI crosses the level line downward, okay? The level line and not the signal line. And with that strategy, the level line is 0. It's by default on the chart, but I can put one horizontal line, okay? I can put it exactly on the 0, and I can make it again a little bit thicker so it's more visual, but it's the 0 line. Here it is. Whenever the RVI line, or this is the green line, crosses the 0 line downwards, I should be closing the trade, or the robot will be closing the trade. And in this case, we are still into a long position, okay? Current price 62,000, we have bought it 59,576. So whenever the RVI or the green line crosses the 0 line downwards, we should exit and close the trade. All right, so with this example that I picked over here, we are still in an open trade and we should not close it. Alright, so if I go back to that example, for example, with the negative candlesticks, you see that we should be selling over here, and actually we should be closing the trade over here. So we are selling at the opening of that bar, and then whenever the RVI crosses the signal line upward, right over here, we should be closing the trade. And I guess that trade would be somewhere around the 0, or as we call it in trading, it would be break even. Now let me look for some more examples so you can understand the strategy better. Right here I see 3 consecutive negative bars. Keep in mind that it's not all the time when we will see 4 consecutive bars, okay? So here is one example. 1, 2, 3, 4. On the opening of the 5th one, we are taking the trade. So I won't be putting any lines. You can just focus on the crosshair that I have in front of me. Open price of that candlestick is 56,487. And you can see that the RVI will cross the 0 line at that moment, and what is it? Probably the cross will be confirmed on that candlestick. Here the price is 57,441, or actually I should be looking at the opening, which is 57,328. So that is a positive trade. Let me go back a little bit earlier and look for some more examples. Let me take the crosshair and I will look a little bit earlier. So right here we had a few positive moves from the Bitcoin, which gave me a few signals with that strategy. The first one was not actually over here because these are just 3 consecutive candlesticks, and if it's not visual, you're not sure if this is a positive bar or not, you can put the mouse on the closing of the bar and you will see that the open price is 49,309.50 and closing price is 49,302.26, which means that the closing is below the opening, so the bar is negative. Now over here we have a very clear signal. 1, 2, 3, 4. On the opening of the 5th one, right at this moment we should buy. And let me put the mouse on the closing so we can see exactly where was the opening and what price. We have 51,189. This is a trade that I took actually, so the entry is right at that moment. This is super simple strategy, guys, very easy to apply. I will drop 2 lines very quickly, and here is the entry. So at that moment we buy, and I will give you a second. When is the exit? When the RVI line crosses the 0 line downwards, right at that moment on the opening of the next candlestick is right in here. Let me put 2 lines again, a horizontal and a vertical one, so we can see. So I always wait for 1 bar as a confirmation. You can see that the cross happened at that bar, and on the opening of the next one we have a clear cross. Okay, we can see clearly that the RVI crossed the 0 line downwards, and at that moment we close the trade. So we have entered at about 51,440 and we sell at 54,523. You do the math how much of a profit that brought me. And if I scroll the chart, you will see that actually right here I had 1 earlier entry, but I have missed that one. Okay, so right here we have a 1, 2, 3, 4 positive bars, and actually this is a positive bar. Let me put the mouse on the closing. You can see that the open was 49,287 and the close was 49,304. So this was a positive bar, and on the opening we have a signal to buy. However, I personally picked that one because I was trading this strategy manually at that time. I didn't have the robot over the chart, so I have missed it. And you see that if I was actually trading with the robot at that time, it would have taken the first entry, and in this case I missed this distance as a profit. Okay, simply I was switching from one broker to another, and I waited for a few days my wire transfer to arrive so I can trade my live account. And just at the beginning of October I was not trading these strategies. Anyway, what I want to say is that if you are trading the robot, you won't be missing any trades, and if you trade manually, it will happen for some reason to miss the trade. And actually this strategy is super suitable if you trade on exchange as well. I mean, if you buy crypto on exchanges and you want to sell them, so you are trading the actual asset, you can open the chart on any platform, any exchange, and trade that strategy because you can see clearly where are the positive and the negative candlesticks. However, the RVI indicator is a typical MetaTrader indicator, so on some exchanges you won't find it, but if you want to trade on exchange, you can always open a MetaTrader demo account just to follow the signals and to follow the charts, but to execute the trades on the exchange through your mobile app, for example. This is what I like to do from time to time, but that's really a personal choice. This is why I wanted to share in the course how the strategies work and where are the entries and the exits, and it's up to you where you will apply the strategies, or if you will be applying the strategies at all. Right, another entry right over here, 1 2 3 4 on the opening of the fifth bar. Right in here we have the entry, and you can see that here we don't have the exit, so entry price is at about 42,300, and the exit in this case would come right in here, which is at the opening of that bar, or the next one, this one, okay, 47,700 something. Great profit with this trade. Okay, so this is one of the easiest strategies you can follow for Bitcoin on a 1 hour chart in both directions. Okay, obviously when the market is positive we will have more buy entries, when it's negative we will have more sell entries. If I zoom out the chart, you will see that for example in this case, when the market was dropping down below the 40,000, we might have some negative trades. I think we have one example over here. Yep, here it is. So 1 2 3 4 on the opening of the fifth candlestick right in here we have a sell. Okay, price is 43,499, and then we have the cross on the opposite direction right over here at that bar. Okay, the opening is 42,058, so we are making money with that trade as well. Okay, very easy strategy. Let me know if you have any questions. I doubt you will, because it's really simple strategy, but of course if you have questions, you guys let me know. I always respond to questions. So that's actually just one indicator over the chart, because we are simply looking at the candlesticks and we are looking for 4 consecutive candlesticks in one direction, either positive ones or negative ones, and on the opening of the next bar, on the next candlestick, we take the trade and we look at the RVI to cross the zero line to exit the trade. Super simple strategy, so let me go straight to the next one. And there we go with the second strategy, which is again on Bitcoin on H1 chart. I will right click over the Bitcoin in the market watch and I will select chart window, which will open a brand new chart. And the first indicator that I'll be adding is the Bollinger Band. So I will go to insert, I will go to trend. This is where you can find the Bollinger Bands. Now the parameters right here are 37 as a period, and deviation of 2.56. okay, 2.56. so with the Bollinger Bands, the deviation will bring your bands closer or wider, and the period is something like a moving average that we have in the middle. So you will see how the Bollinger Bands look like in a second. I will make it a little bit thicker. I will click on OK, and here it is. Okay, so you see we have those bands, which I said go closer or they open according to the deviation we have selected in the input. But in general, whenever the price makes an impulsive move, like right over here, we see the bands opening, and when the price is just going sideways, like in this period here, we see the bands going closer to the middle line, which is, one more time, the Bollinger Bands itself, with a period of 37 for this strategy. Okay, so the condition here is to buy when the bar or the candlestick opens above upper band after opening below it. Okay, so let's have a look at the first example I see over the chart, this one over here. I will uncheck this, scroll the chart to the end on tick incoming so I can actually move the chart. Okay, and here it is. I will zoom it even more, so let me just find it. Right over here we see impulsive move, And then obviously we have a new bar that will open outside the Bollinger Bands. You can keep it on a bar, you can switch it to candlesticks. I prefer to see candlesticks because it's just more visual when we have positive and negative ones. It is visual with the bars, but in this case where the price is just going sideways, not really, okay? But when you're on candlesticks and you have different colors, much easier to see positive and negative candlesticks. Okay, so here we have this impulsive move. Whales probably are buying it, and on the opening of the next bar, we enter, we buy. Okay, so we need to see one bar opening below the upper band and one bar opening above the upper band, and on the opening of this bar we are buying. Okay, let me put a horizontal line. I won't be putting it precisely, so the entry is somewhere at 47,070 and the exit is with the force index. Okay, so this is a second indicator that I will add to the chart. So I will go to insert indicators and I will go to the oscillators and I will select the force index. Okay, period of 42 instead of 13. I will make it again a little bit thicker and I will hit on OK. So I will have the force index below. Now what is the condition? The force index crosses the zero line downward. Now I will move the chart a little bit and you will see the zero line. Just in this case, in this example that I picked randomly, right over here, we are above the zero line and it's not visual. Actually, it's visual right here, okay? Right at that moment, it is visual. But for quite some time, the price is above the zero line and I will move the chart until here, okay? This is where we have the cross. So when we're in a long position or when we buy, we will close that trade when the force index crosses the zero line downward, or when the force index with period of 42 goes below the zero line. I can put one horizontal line again on the zero line so it will be more visual. Here it is. I will go to the parameters, value, I will hit on 0. Okay, here it is exactly on the zero line, and you can see that on that bar right over here we have the confirmation. Okay, during this bar the force index is crossing the zero line, so I always wait for the next bar to open to confirm that the cross was real. And why I wait for that? This is because sometimes the force index, or not just the force index, but many indicators will go very close to the line, like what we have in here, and then it will cross it and we can see a cross. But if the next bar is positive, like what happened in here, the cross will not be visual and we will not see it later. Okay, this is why it is very important to trade and build strategies with robots where we have backtest and we see exactly what happened. Anyway, the indicators are repeating. I already explained that. And just giving another example of how to confirm a cross. Wait for the opening of the next bar. Alright, so right here we have the exit at the opening of that bar. I will put it again close to the opening, not really precise, just for demonstrational purposes in this video. You can see that the opening of the bar is at 54,836. Okay, and if I zoom out, you will see that profit over here. Okay, entry is at 47,000 and exit is at 54,800. Not a bad trade. We took that distance, and you see that during all of that time the force index was above the zero line. So very same thing on the opposite side. If I look for a bar that opened below right over here, I want to show some negative trades as well, negative examples, not only profitable ones, because like every strategy, there will be losing trade. So let me remove that line from the charts. Okay, I didn't want to remove the zero line, so I will put it back. I want to remove just that line, or actually I will use it, okay? I will use it for the new entry. Right in here, we have a bar that opens below the lower band, which gives us a sell signal. Here it is, and I will put a vertical line so we can see exactly where it is. Right at that moment, we have the confirmation to sell. And when we are closing the trade, whenever the force index crosses the zero line upwards, it's right in here, again, waiting for the next bar as a confirmation. Let me zoom a little bit the charts. Yep, here it is. So here we have the confirmation to exit the trade, and if I put a horizontal line, you will see that it's on the opening of that bar. And actually this is still a positive trade. I thought it will be a losing one, but the entry is right in here, okay? A bar that opened below the lower band of the Bollinger Bands, right in here about 47,321, and the exit is when the force index crosses the zero line above and on the opening of the next trade. So the cross was here, right? And then on the opening of the next one, we can see the exit signal at 46,629. So still I'm getting about what is it, $600 as a profit. All right guys, so this is the strategy, very easy. You can play around over the chart of your platform and see more examples. It will be a good exercise. At the end of the section, we will have an assignment which I would suggest you to do, so you will understand and see how the strategy works. But one more time, the best method to see a strategy working and where the trades should be open is to leave the indicators over the chart and leave the expert advisor trading, so you will see exactly when the trades happen and when the robot will be opening or closing the positions. This is the only way we can see precisely where the trades happen in the past, because one more time, if you look over the chart, you will see some repeating indicators and false entries or exits. Many traders and mentors actually are building their strategies on the historical data, and if you don't have software to calculate and give you a precise backtest, you won't be able to have a profitable strategy. So if you depend on entries just looking back on the chart, the chances of using a losing strategy are huge. I'm showing you these entries back on the chart, but I know that this strategy is actually profitable until the moment because I have the backtest and I tested the strategy with the EA Studio software. But if you want to confirm it for yourself, you can do the backtest on MetaTrader just as I already showed, and you will see what is the performance of the strategy on your broker. Of course, the spread is vital, but if actually you're using a huge spread, it will be really hard for you to do trading, especially on hourly chart or on the lower time frames. So do not hesitate to perform backtest on your broker with any of the strategies to see what is the backtest, and of course it is recommendable to test the strategies on a demo account so you will see how they work. Thank you for watching, and I'm going straight away to the third strategy. Hello everyone, it's Petko Alexandrov and I'm very happy to show you the third strategy for the Bitcoin. I really hope that you enjoyed the first two. I did my best to select simple strategies that I'm using with simple expert advisors. And if you have experience in trading, and especially with cryptocurrency trading, you will know that the market is very volatile, and you will know that if you use many indicators, you will miss a lot of entries. For example, if I'm using 2, 3, 4 or more entry indicators and I'm waiting for them to confirm before I open a trade, I will miss many entries, and this is what we don't want to do with Bitcoin, okay? Because it is a super volatile asset, and sometimes when we miss it, we might wait for quite a long time before the next opportunity. This is why, especially with Bitcoin and especially on the 1 hour chart, most of the time I use simple strategies. Just one rule for entry and one rule for exit. And having a good backtest that proves the strategy is profitable is good enough for me to start testing it on a demo account and after that on a live account. Obviously, these strategies I've been trading for some time before adding them to the course, but as I already said in the previous lecture, make sure to perform your backtest and make sure to test the strategies on a demo account before risking real money. And of course, you might never trade on a real account. That's okay. Some people prefer just to practice on a demo account and to experiment, and this is totally understandable, especially if you have no capital to invest. I personally spent a lot of time just learning and practicing before I started actual trading, and I think this is the right way to go. Not only because I didn't have money at the beginning to invest and to trade with, but because trading is a serious thing and you should practice a lot before you risk real money. This is what I think, and this is what I would suggest you to do. But one more time, it's a personal choice. If you will be using any of these strategies, if you'll be trading on a live account or a virtual account, it's your own risk that you are taking. So the best thing would be first to practice and test the strategies. Strategy number 3, let me open one more chart on Bitcoin chart window. Here it is, and I will zoom it a little bit. I will switch to candlesticks, which I said is more preferable for me. And the first indicator I will add over the chart is the Williams percent range, which is an oscillator indicator. Yep, here it is, so Williams percent range, and I will click on it. So what we have here is period of 14 by default, but I will change that to period of 47, and the levels I will keep them to what they are, -20 and -80. I will just make it a little bit thicker again, the levels, and the parameter I will make it thicker. Aqua is pretty visual color, so we'll just click on OK. Here it is, displayed below the chart. You can see that it goes from 0 to -100, and we have -20 and -80. This is just how the Williams percent range indicator is displayed. This is our entry. So we have the entry signal to buy whenever the Williams percent range crosses the level line downward. And since we have 2 level lines, we buy when the line crosses the level line downwards. For example, right over here, we have a few entries, right? But this is the first one I see on the chart. Let me uncheck that box again. So here it is. This is a good example because we see the negative market, then it's going to positive, and we buy when we have the line, the aqua line, or this is the Williams percent range with period of 47 crossing the -20 downwards. This is when we buy. This is our signal to buy, and I will put a line over here. What is it? Is it that bar, the opening of that bar? Let me grab the vertical line. Yep. Okay, so the cross is on the previous one, and we have the confirmation on the opening of the next bar. So it's approximately at 57,640. Right in here we have the confirmation to buy. And if I move the chart, you will see that the price went to the positive side. But let me share with you when we have the exit. And I will add the indicator CCI, which is Commodity Channel Index. It's another oscillator indicator. Here it is, Commodity Channel Index. And for period, I'll be using the roundish 50 number, okay? I will make it again thicker, and I will go to levels and change level of negative 115 instead of 100, and as well I will make it positive 115. So I'll click on OK. Let me actually change the colors and make them a little bit more visual, like red, and I will click on OK. And here it is. Okay, so 115 and negative 115 we have as levels, and here they are visual, not that visual. So let me go to the indicators list and I will edit the CCI. I made them red, but I will just make them thicker, and here they are. Okay, these two lines, okay, negative 115 and positive 115. Now, for the long trade, one more time, we buy when the Williams percent range crosses the negative 20 downwards. And here we have an example entry. And you can see that at this moment, the CCI is between the negative 115 and the positive 115, okay? The zero line is between those two. So the exit for the long trade is we need to see the CCI lower than the negative 115. So at this case it is above the negative 115, and still we didn't have the exit until the current moment. With this example that I picked randomly, and I will just look for other examples, we are buying right over here after the Williams percent range crosses the negative 20 downwards, and then we are on a profit. And I know many of you might be confused with some of the strategies that I show, because I use the indicators in a different way from what they're commonly famous with. And sometimes my buy signals are when actually the indicator decreases or it is below a certain level. Now, these strategies are known to be swing trading strategies, or we are buying when the price is cheap and we're selling when the price is expensive. My idea of creating these strategies comes from my method of investing on the Bitcoin market. For example, if I bring one platform here that I have with some analysis, you will see the Bitcoin daily chart. And what I usually like to do is to buy Bitcoin, but this is on exchanges for investing purposes, right? I like to buy Bitcoin when the price drops. For example, recently I saw that the price dropped back in September with over 25%. Okay, it bounced from the 39,400. So all of these candlesticks here were a great moment for me to buy, because 25% drop for the Bitcoin is huge. As well, previously in May, we had this huge drop, right? When the market crashed, the whales were taking some profit. Elon Musk supported the drop, okay? But it was not his fault, right? It was the people panicked. This is why the market dropped with over 50%. And I actually recorded a video about that candlestick right here, which turned out to be the bottom. And I said, this is the bottom. And I still keep it marked, and I actually posted this video on YouTube. Anyway, doesn't matter. What I want to say is that I prefer to buy Bitcoin or any other crypto when it loses over 25, 30, 40, 50% of its value. This is when you have to buy for a long-term investment, not when it reaches new record highs. Because if you were buying back at these moments here, when the price is at new record high and new record high and new record high, you're getting closer to the moment where the whales will be taking profits. And remember that the whales always take profit at some point, right? So you see where I'm buying it, right after a decline and not on the tops. And usually what happens with the people that buy on tops, they lose money. So this is when I was shorting the Bitcoin, and after it lost over 50% of its value, I started looking for new opportunities. The last time I have bought it was about right here, after it lost 25% of its value. But this is investment, and we're not talking about investment in this course, right? But trading on the lower time frames like 1 hour chart is quite similar. I want to buy when the price loses some of its value. So in this case, with the Williams percent range crossing the -20 downwards, shows that the price lost some of its value in the recent hours, maybe in the recent days, and after that it is very likely to continue higher. And one more time, these strategies are back tested. I have done many tests with the software I'm using, so I saw that they are actually profiting in the way I use them. But this is the idea behind these strategies. And for example, with the other one where I use the 4 consecutive candlesticks, right? I'm using the momentum where the market gets positive, I want to join in, right? So there the logic is different. I buy after some positive move, and here I buy after some negative move. So in this case, I grab different market conditions. I diversify the risk between different strategies, and actually that's the idea when we are trading with different strategies. Anyway, I'll be just showing you one strategy and it will be so much easier. But long ago I figured it out that I should be trading not with just one strategy but with many, because this way I grab many market opportunities, and at the same time, if one strategy is losing at one point, and this will happen for sure, the others will be profiting and they will compensate, okay? They will diversify. This is the risk diversification when we are trading. Right guys, so I hope this strategy is already clearer. If it's not, I will just show you one more example, and let me show you actually a sell trade, and I will try to show you a losing trade, because as I said, there are always losing trades. So here was the entry, and previously right in here I can see the losing trade, okay? Sell trade, that was a losing one. So I will delete now this entry, the most recent example, and I will show you the sell trade that turned out to be a losing one right in here. So for the long trade, we said that we are buying when the Williams percent range crosses the -20 downwards. So the very opposite will apply for a sell trade. We need to see the Williams percent range crossing the -80 upwards, and it happened at this candlestick. So on the opening of the next one, we have a sell trade right here. You see it went below the -80, and when it goes up, we are selling, and it turned out to be a losing trade. So let's see how much I have lost with that trade. 54,562 is the entry point. This is where we are selling, and the exit would be when the CCI is higher than the level line, and it gets higher right at that point, higher than the positive 115, and in this case it gets higher right in here. So we would have that loss right at this candlestick. Here's the exit. So we sell at 51,562, and we should be closing at 57,685. That is an example of a losing trade. As I said, I wanted to show you some losing trade, and I just noticed that this was a bad entry right here. Okay, you see that the Williams percent range just went below the -80, and then it went up. But something to mention here, that would be a losing trade if we are not previously into another trade. But I don't want to make this video any longer and look for the previous trade. It really depends on when you sit in front of the computer, if you're trading this manually. But if you are trading with a robot, it will take the right moment for the trade, and it will not miss any trades. And in the next video I will show you how to place the robots for these 3 strategies so you can trade them automatically. And as I said, this is how I prefer to trade, but I wanted to show you and explain to you how the strategies work so you will understand the robots. And this is vital. If you want to be an algorithmic trader, you need to know how the robots work. Many people buy robots from the marketplace and they have no idea when and why the trades will open, and this is ridiculous for me. I'll never do that. So these are the 3 strategies for the Bitcoin. Let me go to the next video. Let me show you how to place the robots on the chart, but I'm pretty sure you already know that. So we'll see you in there, guys. Alright guys, so now I will drop the 3 expert advisors on the MetaTrader platform on my VPS, and I will leave them trading. So I won't need to stay in front of the screen, right? That's the idea of algorithmic trading. I'm sure you already have downloaded the expert advisors at the beginning of the course. So what I will do now, I will go to File, Open Data folder, and then I will click on MQL4 and I will go to Experts. It's that easy, okay? I will paste them and here they are. Now I will close the folder and I will right click on Expert Advisors in my Navigator tab and I will hit on refresh. Okay, now this will compile the Expert Advisors and here they are. So first I will need to enable the auto trading, of course, and I will double click on the first expert advisor and I will go to inputs and I wanted to check if this is the right expert, and it's not. Okay, Williams percent range and the CCI. So this is for the 3rd strategy. Okay, this is because I exported these robots in a different order from what I showed in the previous lecture. So the first robot over here is for the CCI and the Williams percent range. So now I will double click on that and here it is. So make sure to just check it, okay? You can double click on it and see the inputs with the parameters and the indicators, Williams percent range and CCI. And this is only if you want to have the indicators over the chart, but it's not a must, okay? If you want, you can trade the robot without any indicators on the background on the chart. It will still trade and open and close the trades because the indicators are inside of the code of the expert advisor. So I personally prefer to have the indicators just to monitor the strategy, and this helps me to improve the strategies. But if you just want to test them, it's okay, even if you don't put any indicators over the chart. I have decided to leave 0.1 lot to all the strategies, especially for the Bitcoin. And if you want to change it, you can do it from here. If you want to trade 1 complete Bitcoin or 1 lot, you can leave it to 1. But I would prefer to stick to 0, and this is a personal choice again, how much of your account you will be trading with. At the beginning, I would suggest you to open a huge demo account, start with small lot, you will see how much margin you will need, you will see how much leverage your broker offers, or if you want to change it, and you will decide with what lot size you will feel comfortable trading. So now I'll just hit on OK, and I have the smiley face in the right upper hand corner. Then I will go to the second expert advisor. Let me click on the middle chart. This is where I have the force index. I will double click and I will check if this is the force index strategy. Yep, it is that one. Okay, Bollinger Bands and force index, here it is, 0.01, all good. I will click on OK. And then the third one will be with the RVI. I will double click inputs and RVI is here. And the other indicator is called candle color, but one more time, it's not available on MetaTrader. So I will click on OK, and I have the 3 expert advisors attached. Actually, I didn't check if it is with 0.1 lots. Yep, it is. Okay. So I have the 3 strategies with the 3 expert advisors attached over the chart, and whenever I have the first signal, I will have the first trades open automatically. I will remove those lines that I used to describe the strategies. One more time, I always prefer to trade with the robots, and this is how I am comfortable, and honestly, I sleep without worrying that I will miss a trade with the strategy I want to use. Okay, and don't make ever the mistake to stay up late night 24 hours following the chart so you won't miss a trade. Okay, this is why there are the expert advisors. This is why I record courses about algorithmic trading, because it's so much easier to trade automatically. And with some of my accounts, honestly, I don't look at the charts with days or even weeks. Just from the mobile app of MetaTrader, I follow the results. And usually during the weekends, I just check the accounts and see if everything is okay, if there are any errors in the experts tab or the journal tab. Okay, keep an eye on those to see if there are some errors at any moment. But if you practice and place the expert advisors in the right way, if your broker is good enough to execute the trades on time, you should not have any issues and errors in these 2 tabs down below here. Okay guys, I will leave now the expert advisors trading. Make sure to start with a demo account one more time. Probably I have repeated that a few times in the course, and I might still repeat it until the end, but this is crucially important to start on a virtual account, on a demo account, so you won't be losing anything. Okay, I really thank you very much for watching, and I will see you guys in the next video. Cheers! Alright guys, so I have the first results now from the 3 expert advisors. Actually 3 trades opened with each one, and you can see that I am above $200 on a profit, and it's quite volatile time for the Bitcoin because it broke the record high that we had earlier this year. It trades at about 66,000 right now. Good thing one more time with that broker is that the spread is fixed. But what I want you to notice actually is that we have 3 trades, 2 are buy or long trades, and 1 is a short trade. Okay, and I know that many of you will say, okay, what's the logic of buying and selling at the same time? For example, these 2 trades opened very close to each other. One have bought and the other one have sold. Right here is the sell order, and if I zoom out, let's see where is the buy order, maybe from the 3rd expert advisor. Yep, here it is. Okay, so I've already mentioned the word or the phrase risk diversification, right? And right at that moment, before breaking the 64,000, we had the trades open, right? And actually this was a key level because many were taking profits. Around the social media there were speculations that the Bitcoin will fail again and it will drop or retest the 50,000, the 40,000. Anyway, the robots don't care about all of that, okay? They don't care what the people write on the social media. They don't care what you hear on the news or what you read from the big websites. The robots follow very strictly the strategies that I already explained. So with that robot that we have with the Williams percent range and the CCI, we had a long entry at that moment. With the next one, with the Bollinger Bands, we had a long entry because the bar opened outside of the upper band right in this moment, which is right after an impulsive move, which gives the signal that we have an impulsive move on the upside and it's time to buy. And with the first robot, which I already explained, you can see that we actually sold and that position went on a loss. But At this moment, right at here, the market was just going sideways, and there was the possibility that a market will drop, right? Because it was retesting the record highs. So if I had just the 2 long trades and the market dropped, I would have been on a huge loss, okay? So this is the risk diversification. 2 out of the 3 expert advisors picked the right direction. One that took the short trade actually picked the wrong direction. But as I said, there was a possibility, and there is always that possibility the market drops at any key level, okay? Keep that in mind. So I just wanted to show you the current market situation, which is quite interesting. Bitcoin goes up. I'm obviously happy because I have long-term investments with the Bitcoin, but that's another question. However, trading with the robots, I'm happy as well because 2 picked the right direction and 1 picked the wrong direction. But one more time, for me this was kind of a protection. At least I accept it that way, because if the market dropped at that moment on the 18th of October 2021 and I had only long trades, I would have been on a loss. But anyway, even the 2 are in the right direction, 1 in the wrong direction, I'm still on a profit on an average base, okay? And one more time, this is just the current market situation. Sometimes you will see that 3 expert advisors will get into the same direction or in the wrong direction. Sometimes 2 out of the 3 will be in the wrong direction. This is the market, it moves up and down, but the most important is that I have tested and back tested these strategies, and so far they show profitability and they all have profitable and losing trades. So when you see a losing trade, it's normal, okay? It is normal. And of course, if you are more experienced and you see that happening, the price going above the 65,000, so here was the break, right, of the key level, and you see that you have still that short trade, you can close it manually and just leave the 2 long trades. Now, usually when I do algorithmic trading, I don't touch the trades. This is my absolute 100% rule, okay? But it's up to you. If you want to close them manually, that's okay. That's a personal choice. I just wanted to show you that when we trade with 3 expert advisors, that's a good risk diversification, because on an average base, I am on a profit with about $200 at the current moment. So I'm used to see losing and profitable trades, EAs trade or robots trading in both directions, even when the market is going just in one direction. That's the idea of risk diversification. This is why I included 3 robots for each market, okay? For the Forex, for the crypto, and for the stocks. Now, if you like any of those, for example, you like the most this robot, right? Or that strategy or any other strategy, you can just trade with that strategy. It's okay. Just with my experience, I saw that when I trade more than one strategy into the account, I have a better average result in the long term, because one more time, I have a good risk diversification. This is how I personally do it. It doesn't mean you have to do it that way. You can leave the 3 trading for some time and just see which one brings you most profit at the current market, and you can just leave the other 2 and trade just the one that is on profit. Or you can keep 3 of them. It's a personal choice. I just showed how I do it, but it doesn't mean you have to do it that way. Okay, guys, I really thank you very much for watching this video, and I will see you in the next one. Cheers. Hello everyone, it's Petko Alexandrov, and in this section I'll be talking about stock trading, which I know is super popular nowadays because most of the brokers offer fractional trading, which means that we can trade or buy a small portion of one share. For example, at the current moment, Amazon sits at about 3,335, which is extremely expensive from where the Amazon stock was a few years ago, for example, right? Or even just last year. However, the fractional shares allow the people all over the world to trade with small amount of money, so you don't really need $3,000 to buy one Amazon share. You can buy just $400 and still you will have real shares or real stocks that you want to invest in and keep in the long term, right? This is because, one more time, the brokers allow the so-called fractional shares, and this made really the stock trading super popular. However, you know that I'm an algorithmic trader and I prefer to trade stocks with robots, and this is what I will show in this section. So you will see 3 robots, one trading on Apple, one trading on Amazon, and one trading on Google. And of course, I will explain the 3 strategies as I did for the Forex and for the crypto. But something important is that I will go down to the M15 time frame and not 1 hour chart, and this is because the stocks are trading a few hours during the day, not like the crypto and the Forex trading from Monday to Friday, or even some brokers offer crypto trading until Sunday evening, and you can trade 24 hours throughout the week. But the New York Stock Exchange or the London Stock Exchange, the Tokyo Stock Exchange, they have certain hours of trading. You cannot trade the stock while the exchange is closed. So for example, if I go to the stocks, and you can see that in US we have the Dow, the New York Stock Exchange, and the Nasdaq, and on each one we have different stocks that are being traded. But for the purpose of this course, I have selected the Apple, the Amazon, and Google, which are 3 of the biggest companies obviously around the world, and I think for quite a long time they will be one of the top companies. Anyway, the purpose of showing you these 3 strategies for these 3 markets is because I have tested many strategies, many robots on many stock trading assets, and I found that Apple, Amazon, and Google give me best results. So pretty much I have done the hard work to test many strategies and to share in my courses only the ones that bring me most profits. But of course, I would always suggest you to practice first the strategies on a virtual account. And actually, I already showed you how to open a demo account and install MetaTrader, so I'm not planning to do it one more time. So I'll just have to tell you that I'm using MetaTrader 5 because the broker that I have selected, in this case it is the Darwin X broker, offers stocks trading on MetaTrader 5. It's a decent broker that I've been using for stocks. Again, don't take it as a recommendation. You can choose any other broker that offers MetaTrader. Of course, I have included the robots for MetaTrader 4 and for MetaTrader 5. So it's up to you which broker you will select, and you can use those robots on MetaTrader 4 or on MetaTrader 5. So if you want to do trading stocks on MetaTrader 5, you need to select a broker. This is very important because the brokers are the companies that offer the stocks, and I personally prefer the brokers that offer MetaTrader 4 or MetaTrader 5 because, one more time, these are the platforms where we can trade with robots. For the purpose of this video, I have selected to use the Darwin X broker, which is a regulated broker. I've been using it, don't take it as a recommendation. Just with that broker on MetaTrader 5, we have the opportunity to trade different stocks like Apple, Amazon, and Google. So quite important to mention is that you can trade real stocks on MetaTrader 5, but you can trade CFDs as well. And it really doesn't matter when it comes to trading stocks on MetaTrader 5, right? Because we are trading them. And especially on the lower time frames where I like to trade, like M15, you won't be keeping trades for a long time. So you're not looking for dividend strategies. So this is totally different. If you want to earn dividends, then we are talking about investing, where we keep the stocks for quite a long time and benefit from the dividends that the companies send to their shareholders. Now, when it comes to trading stocks on MetaTrader 4, we're just trading on the value of the asset, okay? We buy at a current price. If the price goes in our favor, we can close the position and we can actually benefit. If the market goes against us and we close the position, obviously we will handle losses. So Pretty much the same thing here if you're trading CFDs or real stocks. But if you are frustrated from where to start so we can get a MetaTrader 5 platform working for the stock market, I will share quickly what I did. I visited the darwinx.com website, which is the broker I have selected to use in this video. Then I have registered an account, and here is my dashboard. So I opened a demo trading account with $50,000. And they have sent me the login details together with a link from where I can download the MetaTrader. Then I just dropped it on my VPS. This is the virtual private server where I have the platforms for the Forex, for the crypto trading, and now for trading stocks on MetaTrader 5. So I just installed it with a few steps and entered my login details. And here I have the platform, brand new account with virtual $50,000. So I can test the strategies I want to trade, and I can do algorithmic trading and I can do manual trading. So I will leave it up to you what type of trading you want to do. It's super easy. If you just want to buy or sell, one-click trading, and you're ready to buy and sell Google stocks, or you can switch to Amazon and Apple and all the other assets that this broker offers. And as I always suggest everyone watching is to start with virtual account, so you won't be risking any real money until you're comfortable, you know what you're doing, you have selected the strategy you want to use, and you are confident that you want to trade with real money and capital that you will be risking. So in the next videos I will share the 3 strategies for Apple, Amazon and Google. They will be simple again, so don't worry, nothing really more complicated from what you have seen. Just the indicators and the parameters are different for every strategy and every market, because the market is different and you cannot trade with the same strategy on all the markets on all the time frames. And one more time, we will switch down to M15 chart, because this is where I found it more profitable to trade with the robots and with the strategies that you are about to see. So if you're ready, let's go to the first one. And before I show you the strategies, I have to mention for the beginners that the stock trading strategies will be working only during the Nasdaq hours. And the 3 strategies that I have selected, the 3 assets, Apple, Amazon and Google, they trade on the Nasdaq. And I waited to record that video just a minute or 2 after the stock exchange was open, and you can see at the current moment it is a little bit 4:30 p.m. with me, and this is exactly when the market opens. So if I zoom the chart a little bit, I'm already on the M15 time frame. You can see that this is the first candlestick, or the first 15 minutes that just opened. Okay, so today is Monday, this is the close of Friday. Okay, I will take the crosshair. You can see that this is 22nd of October, and today Monday 25th of October 2021 at 4:30 p.m. the stock market open. Obviously in the United States this is 9:30 in the morning. Or to make it simple, the stock exchange in the United States works from 9:30 in the morning until 4 o'clock in the afternoon. So after 9:30 the robots for these strategies will start looking for trading opportunities and to open the trades. But you have to calculate what is your current local time, so you will know when the strategies will be trading or when the robots will be trading, or if you want to trade them manually, at what time you have to sit in front of the computer in order to follow the charts. So one more time for me, this is 4:30 in the afternoon. Now 5 minutes after the market is open, you can see that Apple goes down already in the first 15 minutes. Okay, so same thing with Amazon. It just opened right now. Here is the new candlestick, and there is Google. If I zoom the charts and I switch to candlesticks, you will see the new candlestick. Okay, so MetaTrader 5 is slightly different from MetaTrader 4. Just it's arranged a little bit different. You can see where the crosshair is as well. If you want to change the time frames, you need to go to charts, and from time frames you can change the time frame. So one more time, for these three strategies, you need to go down to M15 chart, which means that one candlestick represents 15 minutes. Okay, and I have selected M15 not only because I found during the years that the more profitable strategies are on M15, but because the stock exchange works from 9:30 to 4, not 24 hours. There are just a few hourly bars. Okay, if you look at the chart, if I switch from charts and I go to time frames and I switch to hourly chart, you will see that Friday was just 1, 2, 3, 4, 5, 6, 7 candlesticks. Okay, and this is the trading day, 7 candlesticks, not 24 like the forex or the crypto, 7. Then on the next day there will be another 7. So if I go one more time to charts and I switch to M15 chart, here it is, you will see that Friday we had many more. Actually, you can calculate easily how many M15 bars there are. But my point of view is that we have more bars during the day on M15 chart and we can do some more trading, okay? Because if we are on an hourly chart, just a couple of bars, not enough for the indicators to react and for the strategies. And with the time I figured out that it is better to trade on the lower time frames. I'm talking about trading with expert advisors, and you will see that in the next lectures. And as well, I will show you the 3 strategies for Google, Amazon, Apple, and I hope you like those. Hello everyone, it's Petko Alexandrov, and in this video I will show you the Apple strategy, and it is really simple one. I will start again from plain chart and I will show you the indicators with some examples, and later I will show you the algorithmic trading for the strategy. And of course, you already have the robot. You can perform a backtest and see the performance with the broker that you have selected to use. So the first indicator I will add is momentum. I will go to insert indicators and I will go to the oscillators. All right, this is where you can find the momentum. Here it is. I will click on it, and we have parameters as default 14 as period, but I will actually change it to 21. I will make it a little bit thicker, and as levels I will add one level of 100. I will make it more visual, for example red, and I will make it thicker as well, and I will click on OK. So the momentum is displayed below the chart. We have the 100 level, which we will be using for the strategy, and actually this is our entry rule. So we will be buying when the momentum crosses the level line upward. Okay, as simple as that. When we have a cross upwards, we buy, and there is another cross upwards, another one, and another one. Okay, so every time it crosses the 100 level, we buy, but one more time with period of 21. Now obviously the short signal, the signal to sell, is when the momentum crosses downwards, right in here. So I can recognize this is actually a great signal. Here it is, just on the top of the move, and then we have one over here. Okay, when the momentum crosses downwards, it is time to sell. So this is the condition to enter. Very simple. But when do we exit? We exit with the indicator Bollinger Bands, which is in the trend group, and I will go to Bollinger Bands. Now as period, I will use 40 instead of 20, and I will just make it thicker again, and I will click on OK. So here it is displayed over the chart. So the exit indicator is that if we are in a long trade or if we have bought, we will close the trade when we have a bar that opens below the lower band after opening above it. Okay, so if we have bought, I will just go to the current moment. Okay, here it is. You will see that we have a bar, just the previous 15 minutes. Okay, we have a bar that opened below the lower band after opening above it. So here was the one opening and we have another opening below the lower band. So this is an exit condition for a long trade if we have bought. Very same thing on the other side. If we have sold and we see a bar opening above the upper band of the Bollinger Bands, it's time to close the position. One last thing, we have a stop loss of $5. So when we are into the trade, we need to put a stop loss of $5 if we want to protect the capital, and this is how I personally use the strategy. So all we have is one entry indicator, one exit indicator, and a stop loss of $5. And now I will look for some examples. Now, because I want to be very transparent in my videos and not to mislead anyone, every strategy has profitable trades and losing trades. Okay, you have to accept that, you have to embrace it. Always don't look for strategies that have only profitable trades, because you will never find such. Okay, I can tell you that after testing hundreds of thousands of strategies. So I want to show you a losing trade right now, and probably this will surprise you, but I will start with a losing trade. So you'll see that losing a trade, it's nothing really horrible, okay? It's part of the game. So now I can see the very clear example here. We have a short trade at this moment because the momentum has crossed the level line downwards, and we can see that the price went into the opposite direction. And if you have followed the video carefully until the moment, you will know that we exit at that moment when we have a bar opening above the Bollinger Bands. Alright, so let me make it really clear. I will put a vertical line right on the signal. It is right over here. This is where we had the cross. So on the opening of the next bar, right in here, we have a very clear confirmation that the momentum crossed the zero line, right? And I will include one horizontal line. Here it is. And you can see that the entry point was at about $148. Okay, so this is a short trade for this Apple trading strategy, and the exit is when we have a bar opening above the upper band of the Bollinger Band, which is right at that moment. I will insert again one horizontal line. Here it is, and I will insert as well a vertical line, and that's it. So we sold here, the price went in the opposite direction, and this Apple trading strategy says that we have to exit. The exit is at about $149.95. So this might look like a huge distance, but actually it is less than $2. So this is the loss that we handled in this case, okay? $1 and approximately 60 cents, all right? So if I zoom out the chart, you will see that this is not actually that big distance, okay? Because the chart was zoomed, it looked like a huge loss, but it's not. Here was the entry, the price went sideways, a little bit up, and we had the exit condition, so we are out with about $1.60. This is if you trade one Apple stock. If you trade 10 Apple stocks, obviously you will have about $16 and something of a loss. If you trade more, you can easily multiply and see how much you will be losing. And you can see that in this period over here, the Apple stock is just going sideways, which is probably the hardest moment to trade on the market. But for example, over here you can see a very profitable trade when the momentum crosses the signal line upwards. Right at that moment we have the entry, and our exit would be actually right in the last minutes. Okay, so let's have a look at that example now. Here we have the entry to buy. I will use the same vertical lines and horizontal lines, so I'll just move them. Here is the cross, and on the opening of the next bar we should be buying, right? So this is at about, I will leave it this way zoomed out so you can see the distance, but this is a price at 140.36. And then for a long trade, at this moment we buy, we should close the trade when we see a bar opening below the lower bands of the Bollinger Band, and you can see that it happened just in the last few bars. And right here will be the exit at the opening of the first bar below the Bollinger Bands. I'm not going to put it super precisely, but you can see that the price is 147.90. Okay, 140, 147, so $7 as a profit if you trade one Apple stock. Okay, if you trade 10, it will be $70. If you trade 100, it will be $700. It depends on how much you are trading. But again, I say this is if you caught this example in here. If you have missed that trade, then you would be in another losing trade at that moment, right over here, and you will have to take the loss right at this moment. Again, a small loss. So this is what I like about this strategy, because if we are in the wrong direction, quite quickly we get out with the exit condition of the Bollinger Bands, and as well we have a stop loss one more time of $5. So for example, if I'm looking at that long trade over here where we entered at 140, we should place a stop loss at 135 just in case the market goes against us very quickly and the Bollinger Band doesn't react to it. Okay, it's somewhere here at 135. I'm not going to put it really precisely, but you got my point. Okay, we buy over here. At the moment we enter on the long trade, we have to place a stop loss, and then we are looking for the exit condition, and in this case it just happened. But if you have missed that nice trade, you will enter into that losing trade over here. So this is why I prefer to trade with a robot. So I will not miss any trade, and the robot catches every trade that is on the market. But this is how the robot works, and I would strongly suggest you to test this strategy, of course, first on a virtual account, so you will see if this trading strategy fits your trading style. Alright, so this is the strategy with a few examples. Very easy to apply. I'm moving straight away to the next strategy, so if you have any questions, don't hesitate to ask me. Cheers! Hello everyone, it's Petko Alexandrov, and now I will share with you the strategy for Amazon. And it is quite similar strategy to one of the strategies that you already saw, because it uses the so-called candle color that I have showed to you, or we are using consecutive bars in order to enter. But because we are on the lower time frame on M15, I am looking just for 2 consecutive bars. So the condition to enter long is to see 2 consecutive bars in the same direction, or in other words, if we see 2 bars having the same color upwards, and in this case I use the default colors that came with the MetaTrader platform, but if I have these 2 black bars, consecutive 2 black bars, it means I have the confirmation to buy, and on the opening of the next bar is my entry to buy. Okay, very randomly I'm taking this example, and I think it will be a losing one, but I just want to show you the strategy. Okay, here it is. So we have 2 positive consecutive bars. On the opening of the third one we should buy, and the price is 3,417, almost 50. Okay, I'm not putting it again precisely. If you want to see exactly where the bar opened, you can put the mouse on the closing of the bar. In this case I will just need to move a little bit the vertical line, and if I put the mouse on the closing, you will see that the open is 3,417.48. So actually I have placed the horizontal line precisely. Okay, but with every candlestick, if you want to see the open price or the high, the low, you just put it on the closing. Okay, and you will see the 4 values. So back to the strategy, here we have a long trade, and of course the very opposite thing on the short side. If we see 2 negative consecutive bars like this one and this one over here, on the opening of the next one we should be selling, okay, or we should be shorting the Amazon. This is how this Amazon trading strategy works. So I will put right in here one horizontal line, and one vertical line. Okay, so you can make the difference. Here we have the entry for a long trade because we have two positive bars, and here we have the entry for a short trade because we have two negative bars. Now, because this is a long trade, let me make it green. It will be easier to recognize. And as well, I will make this line green as well. Here it is, and I will pick any of the green colors, and here it is. Okay, so where the two cross, this is a long trade. Where the two cross, this is a short trade. I just picked those randomly. So let's see where it's the exit condition, and we will see if this long trade actually is a losing one. So far, the short trade looks really promising. But before we look at the exit condition, I have to mention that we have a stop loss of $50. Okay, so once we buy, one more time, the price is 3,417.48. We need to put a stop loss $50 lower. Okay, I will take one and I will go to the properties. So we have the price of 3,417.48 minus $50. That is a stop loss at 3,367.48. It's actually an easy calculation, guys, but I have recorded so many videos today that I cannot do a simple math, honestly. Okay, so now going for a red thicker line because this is a stop loss, and I will just change how it looks like because it's a stop loss. Okay, so here it is, $50 lower. Here is the entry, two consecutive bars, and here we have a stop loss. Now the exit is with an indicator called Williams percent range, and I hope you are already familiar with it. So I will click on insert indicators and I will select the Williams percent range, which stays on the top with that broker, and as a period I will use 31 instead of 14. And I will just make it thicker again. Aqua is pretty visual, but for a level I will change the -80 to -83, and here I will have to change it to -17. Okay, so they always have to sum up to 100. I will click on OK and you will see that it is displayed below the chart. We have two levels, -83 and -17, that I have modified. Okay, the default -80 and -20 don't really work well with that strategy, so you have to change it with -83, -17. And the exit condition for the long trade is when we see the Williams percent range going below the -83. So if we have bought in here, we should be selling, I will take the crosshair, when the Williams percent range goes below the 83 level, which happened just with that candlestick. Okay, this is the loss that we will be handling. So if we enter at 3,417, we should be out at 3,399, or in other words, we will be losing about $17, around $17 with that position. Okay, we buy, the market goes in our favor, but then it drops drastically, and Williams percent range detects that, and we have to close the trade right in here when we see the Williams percent range below the 81. This is for the long trade. Alright guys, so before I continue with the short example, I want you to pause that video and think a few seconds, where is the exit for the short trade? I already said that for the long trade, we exit when the Williams percent range crosses the -83 down, or it goes below that level. Okay, so here it's quite an interesting situation. With that short trade, we are just right after the long trade is closed. Okay, so here we have bought after two consecutive positive candlesticks, and we went on a profit. The market turned around, and at that bar over here, actually at that bar is the cross, so the confirmation of the cross comes exactly on the opening of the next bar. We should be closing this long trade, okay? Because we have a clear cross of the 83 and we can see the Williams percent range going below. But on the very same opening of that bar, we have already 2 consecutive negative candlesticks and we have to open the short trade, okay? So at the opening of this bar, we have the closing of the previous long trade because of the Williams percent range getting below the 83, and we have the confirmation to short the market, or simply said, we are switching the positions, okay? We have bought, we close it, we sell because we have 2 negative consecutive candlesticks, okay? And we have to short Amazon. And until the moment, you can see that the price at the current moment is about 3,367. We are at about $90 of a profit. Or if you are trading with 10 stocks, 10 shares per position, you would be with a bigger profit of $900. It depends how much you're trading with, okay? But in my videos, I always talk about the distance because this is what matters. So in this trade, we have $90 of a distance as a profit until the moment. All right, and now we have to keep an eye on it, and we should close the trade when the Williams percent range gets to the opposite side and crosses the -17 upwards. And this is the exit condition for the short trades. I hope you figured it out already. Very easy strategy. And of course, here we have a stop loss again with $50. So if the entry is at 3,397, the stop loss is at 3,400. Let me try to do it without a calculator now. So it will be 3,447.86, right? Hope I'm not wrong, guys. So here it is. Okay, here is the entry. This is where we sell it. At the moment of the sale, we should be placing the stop loss just in case to protect the capital. But in this example, at the most current example, actually, you can see that the price goes downwards in our favor and we are already on a profit. So don't be scared when there are losing trades. This one is a losing trade, but right after that, we are into a profitable trade. And as I already mentioned in many of my videos, there are always losing trades and profitable trades with every single strategy. So this is quite an interesting example right here that we are closing the trade and we are opening a new trade in the opposite direction. And this is quite useful when you start trading to have such a strategy, because what happens usually when people buy Amazon or any other stock, they fall in love with their position, okay? They decide to buy, and even they see the market going against them, they hold it, right? They are so sure that they are in the right direction, they can handle huge losses. And some people are handling losses for years. I can tell you that with certainty because I have been working for brokers and I have seen clients holding positions for years in both directions, okay? Long and short, because they believe they were right and they don't want to accept what's going on currently. And with this Amazon trading strategy and exactly with that example, you can see that what we think will happen sometimes could be really misleading. This is why I learned to follow exact strategies, and no matter if I believe the Amazon price will go up or down, I follow the signals and I follow the strategy. So at that moment, the Williams percent range shows me I was wrong and I close it and I go short and I'm on a profit, okay? You got my point. I follow the strategy strictly, and because I really want to follow them strictly, I prefer to trade with the robots. Hello everyone, it's Petko Alexandrov, and in this video I will share with you the Google trading strategy, which I find very easy and I feel very comfortable when trading with it because it uses just the moving averages, and you will see that it is easy to apply it manually, and obviously it is super easy with the robot because the robot does the whole thing and we don't do anything. But as promised from the beginning of the course, I will show each robot how it works, what indicators stand behind the strategy, and how you can implement that strategy if you wish to use it for yourself manually. So the first indicator I will need to insert is the moving average. And with some platforms we have a moving average crossover indicator, or you can place two moving average straight away. But with MetaTrader you need to place them one by one, so let me do that very quickly. The first one is 15 moving average. I will just make it thicker and I will click on OK. And here you can see a line that just makes the chart smoother, right? When the moving average goes down, it means the price goes down. And if the moving average just stays flat, it means the market goes sideways, just like what it does right now. You can see the price going above and below. And if you use just one moving average to buy and sell, when the market is sideways, you will handle losses, or probably you will be just paying a lot of spread, because you will sell when the price goes below, you will buy, you will sell, buy, sell, buy, and you will end up losing a lot of money for spread and commissions, right? And this is why, as a solution, we use a second moving average. And in this case, I will be using a moving average with period of 38. And I will change the color. Usually for the fast moving averages I use hotter color like red, and for the slower ones I will use, in this case, orange, because we will have some more lines over the chart. So now I have a second moving average, period of 38, which is slower. And if you wonder why we say it's slow and fast, the fast moving average with a smaller period follows the price faster. This is why it's called to be a faster one. Okay, you can see right here the market goes up and then it changed drastically downwards. So the faster moving average reacts faster, and it has period of 15, which means that it takes as a value the closing of the last 15 bars. It summarizes those and then divides by 15. It is as simple as that. And the other one, the slow moving average, in this case 38, takes as a value the closing of the last 38 bars. And after summarizing those, it divides by 38. This is how the moving averages work, alright? Nothing really complicated. Now for the entry rule, or we will be buying with this Google trading strategy when the fast moving average crosses the slow moving average downwards. Yep, you heard me right. We are buying when they cross downwards, and we are selling when they cross upwards. So here we have such a cross, right? I will just zoom out the chart a little bit so we can see better. And the one cross that we have is right in here. I will put one horizontal line. The cross happened on this bar, so on the opening of the next one, here it is, we will be actually buying, and the market goes against us. Probably this will be a losing trade. I'll just make it green, and I will change the style. Okay, here it is. So this is the entry, okay? Just ignore that the market goes downwards. And as you know, I like to show in my videos losing trades for the strategies, because we always have losing trades, not just profitable ones. But of course, with this Google trading strategy, we have more profitable trades, so stay with me. This is the entry rule. We buy when the fast moving average crosses the slow moving average downwards. And once we buy, we need to put a stop loss $90 lower, and in this case the entry was $2,855.25 minus $90. What we have, $2,765.25. So just put one horizontal line. I will go to the properties. I will make it red because this is a stop loss. I will change the style so we can recognize it's a stop loss. And as a value, I will enter 2,765.25 and I will click on OK, and here it is. Here is the stop loss. But as well, we have an exit condition, and the exit condition is with another 2 moving averages. Okay, so I will go to insert again, indicators, trend, moving average, and the first moving average will be with period of 10. Okay, so it's another fast moving average, and now I will change the color to darker blue, for example, so we can recognize easily which are the entry moving averages and which are the exit moving averages. Here it is, but it's too dark. I will make it a little bit lighter so we can see it, because the background is dark and it's just hard to recognize. Okay, here it is. This blue line is the 10 moving average, and I will add one more moving average, which will be with a period of 30, and as well I will give it lighter bluish color. For example, that's spring green. Actually, it's green, it's not blue. Let me go to aqua and I will click on OK. Here it is. Okay, so you can again recognize that the first one, or this is the moving average with period of 10, is the one that is closer to the price, and the other one is the slower one, which is actually faster than the 38 one, right? So focus now on the 2 blue moving averages because they are the exit condition, and for the long trade, when we buy, we should close when the fast moving average crosses the slow moving average downwards. So it is the very same condition as with the long entry, but with different moving averages. So right here we buy because the red one crosses the orange one downwards, and we have the confirmation to buy. So in this example, we should close the trade before the price reaching to the stop loss, because at that moment we have the cross. Okay, you can see that the 10 moving average, the blue one, crossed the 30 upwards, and then right here it crossed downwards, and on the opening of the next bar we should actually close the trade, and in this case it is at about $2,810, which means that we will be handling a loss of $45 approximately. Okay, I'm not looking at the cents, just want to explain the strategy. So to summarize it one more time, we have the entry from 2 moving averages. One in this example is the 15 moving average, the red one, and when that 15 moving average crosses the orange one downwards, the orange one is with period of 38, we have the confirmation to buy. We close the trade when a 10 moving average crosses a 30 moving average downwards. I have made them blue so it's more recognizable, and in this case we have an exit here. But don't be frustrated because I'm showing a losing trade. I always show losing trades. I don't want to show only profitable trades, but stay with me because I will show you as well some great profitable trades with that strategy. Alright, so now I will show you a profitable trade because I know that the beginners are usually enthusiastic to see profitable trades, and the experienced traders at the same time are comfortable looking at losing trades because they know that there will be losing trades sooner or later. Okay, let me zoom out the chart so I can see some more examples. You can see how nicely the moving averages follow the price. And let's check out some more examples. So here was the most recent example, and I think here we have a decent example. Okay, right in here you can see the red moving average crossing the orange one downward, so we should be buying it, right? Let me use the same horizontal and vertical line. Right in here we have the cross, and probably we see the clear cross on the opening of that bar. Here it is. I will drop the horizontal line as well So the opening of that bar is at 2797.56. Okay, we have the confirmation to buy. One more time, this red moving average crossed the orange one downwards, and you see the price dropped after that. I said that the stop loss is 90 pips lower, and here we have some easy calculation. I should bring down the stop loss to 2,707, and yep, it's not hit. Okay, so you see that the position went into a loss, but it didn't reach the stop loss. The stop loss is somewhere down here, $90 lower. Yep, exactly. So now we should be looking for the exit, and the exit will come when the blue line with period of 10 crosses the blue line with period of 30 downwards. Now this happened probably in here. I will need to zoom the chart to see in details. But when the price just goes sideways, the blue lines on all the moving averages just will go one over another. So you really need to zoom the chart. And this is why the best option to see where the cross is with the backtest, but I think I see it clearly here. Okay, so this is the fast moving average. You can see that it crossed right in here. So this is the cross, and on the opening of the next bar, right at that moment, we will have the exit, okay, at 2825. 2825. I will just put a horizontal line, 2825. This is where we should be closing the trade. This is the exit for that long trade. Okay, here it is. I will click on OK, and I will put just a vertical line so we can see if I zoom out the chart again. Okay, so here is the entry. Let me zoom in a little bit. Here is the entry right at that point. The price goes against us, but then it goes in our favor and we are taking the profit. And in this case, we will be taking a profit of about $27.8, right? That distance. Of course, it depends with how much you're trading again. If you're trading this Google trading strategy with 10 or 100 shares, you will be actually profiting $270 or $2,700. It depends on how much you are trading with. Okay, let's have a look at the strategy one more time. Here is the entry. The price goes against us, but it doesn't reach the stop loss and it goes in our favor, and here is the profit. And now, because I don't want to make the video any longer, I will leave it on you to figure it out when is the entry and the exit when we are shorting the market, okay? When we are shorting Google with this Google trading strategy. I'll just give you the hint that it is the very opposite thing from what we have on the long side. You should be implementing into the short side. So now we will have an assignment with that strategy for Google on the short side. I would strongly suggest you to go over it because it will be a good exercise, and you will see for yourself if you got that strategy right. Hello everyone, it's Petko Alexandrov, and in this video I will share with you how to place the expert advisors or the robots for Apple, Amazon and Google. It is very similar to MetaTrader 4, except the fact that we cannot use this refresh trick on MetaTrader 5, but the approach is very similar. Again, you can leave the indicators over the chart or you can remove them. I would suggest you to leave them so you can see where the expert advisors are opening trades, and actually this is how you will learn more about the strategy, okay? Because the expert advisors will open the trades exactly where they should be opened, and you will see that this is right after the indicators show the signal. So now what I will do, I will just copy the MQL5 source files because I'll be using MetaTrader 5. But as you already have seen, I have included the MetaTrader 4 versions. If your broker offers stock trading on MetaTrader 4, you can use those robots. So now I'll go to File, Open Data Folder, and I will click on MQL5 and I will click on Experts. Here we have one more file to click. I will go to Advisors and I will paste here the expert advisors. Actually, I have some by default from MetaTrader 5. I will delete those and I will paste the expert advisors that I have copied. Then what I will do, I will double click on each one and the meta editor will open. So here it is. And you can see the strategy with the parameters and the code. Everything about the strategies in here, but into a code that I really don't understand. I don't know. All I know are the parameters at the beginning, and actually you can change the parameters from here, but I wouldn't suggest you do that. I will just click on compile and you will see that it's generating the code without any errors or warnings, and it happened very quickly. Now I will do the very same thing for the other expert advisors. I will just double click on them. They will open in the meta editor. I will click on compile. And basically this is the only difference with MetaTrader 4 and MetaTrader 5 when it comes to algorithmic trading, that you have to compile the expert advisors from the meta editor, but it's just one click thing, okay? It's not anything about coding. You don't need to touch the expert advisors or the codes. After that, I will close the meta editor and I will close that folder. I will go to the expert advisors now, and in advisors you can see the robots ready for trading. Here they are. So the first one is for Apple. Again, I will need to enable the algo trading. Here in MetaTrader 5 it says algo trade instead of auto trading as it says in MetaTrader 4. So I will double click on the Apple Expert Advisor or the Apple robot. I will make sure that it allows algo trading, and in inputs is where you will see the inputs of the strategy. This is from where you can change the inputs if you decide, okay? You can do it from the code, but I would suggest you to use the inputs, because if you type something wrong in the code, it might affect the strategy. So I personally never touch the code. And here are the entry lots. Now, because I have opened a huge demo account of $50,000 again, I will be using 10 entry lots for each one, and this is how I have created the expert advisors. So this is what you will see, but you can decrease it to 1 or you can increase it to 100, up to you. I will leave it to 10 and I will click on OK. And once I do that, the expert advisor is attached over the chart. We don't have the smiley face here in MetaTrader 5, but if I look in the journal, you will see that Expert EA Studio for Apple loaded successfully and it is attached on the chart. So now I will go to Amazon and the very same thing in here. I will double click on the Amazon robots. Here are the inputs, 10 lots. It's okay. I will click on OK. And the last one is the Google strategy. Double click, very easy. I just click on OK and I have now the expert advisors attached to the charts, and I will be expecting the first results. Alright guys, so this is the very small difference when trading MetaTrader 4 and MetaTrader 5. I'm talking about algorithmic trading, right? Not in general. In general, there are some differences, but it's not a lot of work, as you saw, to compile the robots from the code. In MetaTrader 4, using the refresh trick, it's very useful when I trade with many expert advisors, like 99, like 50, 60. I have shown in some of my courses trading with 99 expert advisors. And if I have to compile 99 expert advisors from the code, it's a little bit time consuming, but with the refresh trick, it happens automatically. This is why when trading with many robots in the account, I prefer to use MetaTrader 4 because it works with that refresh trick. But when trading with a few, like in this example, it's absolutely fine to compile from the code. Okay guys, so now I have the 3 expert advisors attached, and I will have the first trades opened automatically when I have the first signal. Alright, it is that simple, but of course I'm here for any questions that you might have. We'll see you in the next video. Hello everyone, it's Petko Alexandrov, and I wanted to show you the robots in action because we have 2 trades opening, one with Apple and the other one with Amazon. So you can see with Amazon we are on a decent profit, $584 and something. And I wanted to show you how exactly the trades were opened. So let me zoom the chart a little bit so it will be more visual. And here it is, okay, this small green arrow shows where the trade was open, and you can see that we have this green line with the buy signal on the left. On MetaTrader 4 we usually don't have it, but on MetaTrader 5 it is a little bit more visual where the trade was open. But both platforms we have these small arrows which showed where the opening is. And here with the Amazon, I guess you already know it, but after 2 positive bars and on the opening of the third one we have the signal to buy, and you can see that the trade was executed right on the first second after the candlestick open. You can see that the opening hour is 9:30 p.m. and 1 second. This is a 15-minute chart, so every 15, 30, 45 and 60 or 0 a new candlestick is open, which means that at 9:30 the signal was there and it took just a second, probably even less, but this is how it was displayed. You can see that with the Apple trade it was exactly at 10 p.m. okay, here a second for some reason. It could be a delay from the broker actually, but it's a second, it's quick enough. So after 2 positive candlesticks on the opening of the third one, the expert advisor placed the trade, and you can see that it placed the stop loss. Let's see where the stop loss is over the chart. Right in here is the stop loss, and the price went in our favor yesterday on the 26th, and today on the 27th is just going sideways. So you already know where the exit is. We'll give you a second to think about it. Yep, right after the Williams percent range crosses the level line downward. So if that happens, the trade will be closed. And for the moment the market is just going sideways, so it is the Williams percent range. Okay, a great profit, above $500 for the moment. And let me switch to Apple and see where the trade is. And if you don't see it from the first glance, just look for this entry line, and this is how easier you can find the arrow. I will zoom again the chart. Here it is, this candlestick over here at the opening of the bar exactly at 10 p.m. So we had the signal that the momentum crossed the level line upwards. Okay, so this is what I was showing throughout the whole course, right? We have the signal crossing at this bar, then on the next bar was actually still not confirmed, and on that bar came the confirmation. Okay, you can see that sometimes it takes even a bar so momentum can have a value higher than the level line. And if I put exactly the crosshair on the momentum on this bar, okay, on that one over here, you can see that the momentum value was 100.27, but this is on the closing of the bar. Okay, it's very important, this is on the closing of the bar, so we have the confirmation that the momentum at this point is higher than the level line, and on the opening of the next candlestick we enter, or in this case the robot entered. All right, but during this bar the momentum was with a lower value, and simply the robot waits 1 bar for a confirmation, and if that bar closes in a value that will drive the momentum above the 0 line, just like what happened here on the opening of the next one, it executes the trade, okay? But during this bar, the momentum value changes. And sometimes we might see a cross, then in the same bar, the cross is not real. Just like what's happening right now. I'll try to zoom the chart in here so we can see. But if I put the cross here on the momentum, you can see that the value shows 99.93. Okay, but look at it, just look at it. It's moving, right? It's moving together with the price. So during this candlestick, it might go above 100, it might go down, it might go above 100, it might go down. So for the robot to have a confirmation, it needs to see a value, a fixed value. For example, in the previous bar, okay, the value of the momentum is 99.89 and it will not move because the bar already closed, the candlestick already closed and the momentum was calculated. But on the current bar, it's not calculated, okay? It is not calculated. 99.96, and probably by the end of the video, we will see a value above 100. And if you are trading manually, you might say, okay, it's crossing now, so let's buy. And it could be right, okay? But it might happen a few times during the bar, and if the price turns negative, we will not see the cross after that, okay? Just like here, it might have crossed during this bar, but after that, we don't see it because the momentum went downwards. So in trading and algorithmic trading, we say that we have the confirmation when the cross was confirmed with at least one bar, and you can see where the trade was open. Just at the closing of the previous, the momentum value was higher, and on the opening of the next bar, the momentum value was above 100, so the trade was open. Okay guys, so I really had to spend those minutes explaining that because I've been talking to many traders, experienced traders with over 10-15 years or even more, and they don't understand that, they don't realize it, okay? Because they didn't do algorithmic trading and they just do manual trading, and sometimes they fail. And quite often I got requests and traders calling me to help them automate the strategy so they can see where the problem is, why they have those fake entries and false signals. So this is one of the reasons, okay? One of the reasons why a manual strategy could fail, because they don't wait for the confirmation. And it's just so much easier with the robots. I don't need to wait, I don't need to hesitate, is the cross real or not? The robot does its work. When there is a confirmation, it will take the trade. And now if I put the mouse on the momentum, see the value, 100. If the price drops, it will be below 100 and we will not see the line tomorrow. And if we look at it tomorrow, there will be no cross. Okay, so I'm really glad that I succeeded to record exactly at that moment. And this is for the entry, okay? As you know, for the Apple strategy, we need to see a bar closing below the lower band after opening above it. So for the moment, we are still in a long trade. We'll see how far the price will go or will reverse. But I learned not to look at the charts and to wait, because I know the robots are there, they will execute the trade and they will close whenever it is necessary. We have the stop loss at 143. If I zoom out the chart a little bit, we should see the stop loss placed. Yep, here it is. Okay, so this is the robots in action. They know what to do because they are programmed with the strategy, with the parameters of the indicators. But it's really nice if you're just learning algorithmic trading and those strategies and you want to master these strategies, leave the indicators over the chart so you can see where exactly was the confirmation. And this is how you will learn algorithmic trading. If you look at the charts with the indicators, and you will see where exactly the robot executed the trade. And especially when you use indicators in the strategy like this example over here, you will see that we need to wait at least 1 bar, sometimes 2, so the confirmation will be real. And one last thing, in this example you can see that the momentum line stayed below the line, below the 100 line for quite some time. Okay, probably it started crossing in this bar, and then this bar, and then this bar as well, finally crossed it, and on the opening of the next one we have the confirmation. Okay, but I'm pretty sure that during this time it crossed many times and it went down, it crossed down, but we need to see a clear cross with a confirmation, and you can see now where the value is. If I put the mouse, 99, 92, might be a little bit off the recording screen, but it is 99, 90 at the current moment. Okay, so we just saw a cross, but now the cross is not in there. Okay, super happy I recorded this video right now, guys, because this is crucially important. So make sure to watch the video again if you didn't completely understand it. And of course, you are always welcome to ask questions, but this is what we call repeating indicators. The current value of the indicator is repeating. This is why we need to see a clear cross, wait 1 bar, and on the opening of the next one, we execute the trades. Or in this case, the robot executed the trade. But one more time, leave the indicators over the chart, leave the robots trading on a demo account, and you will see how the strategies work 100%, okay? Because the robots execute the trades 100%. Thank you, guys. I am super happy that you completed that course. I hope it was not hard to learn. I did my best to simplify the algorithmic trading into ready-to-use robots, which I think is most appropriate for beginners, or even if you have some trading experience, you will improve your results because you have ready-to-use robots on the forex market, the stock market, and the crypto market. And actually, I prefer to separate the trading into different platforms. So I know that one platform is for stocks, the other one is for crypto. Actually, this is the forex, this is the crypto, and this is the stock market. And of course, if you find a broker that is suitable for you, a regulated broker, as I said, is the best choice, that offers stocks, forex, and crypto, you can put the 9 expert advisors on one platform. And don't forget that you have made it until the end of the course, which means that you have the desire to learn, and this is the right way to go. I have spent years on trading but learning at the same time, and even now, being an online instructor, I do my best to learn one new thing every day. No matter if I'm recording videos, no matter if I'm editing the videos, if I'm trading, if I'm investing, I always find those 10, 15 to 30 minutes per day to learn something new, something that was not really familiar to me, something that I never had the chance to get into the details. So I always dive into these details that make a difference. And this is how I came up trading with robots and algorithmic trading, and I think this is the best way to participate on the forex market, on the crypto market, and the stock market. So never stop learning, never stop completing courses that you have enrolled into, because this way you will get better and better every day and you will improve your trading skills. So once again, I really want to say thank you to everyone who succeeded until the last lecture. I'll be super happy if you leave a review to the course. This way the other students will know more about the course and they will take an easier decision if this is the next trading course for them or not. I thank you very much for staying with me until the end of the course, and I wish you all the best and safe trading.